That's weird. Well. Oh well. Interesting. Yeah, it's kind of like major corrective. That's an interesting chart. I like that chart. Weird, man. There's no like on these links, there's no preview thing. It's really strange. Who dis? Well, I don't have time for that nonsense. 10 billion baguettes. It's quiet for now. Alright, I was trying to get my links out to Discord. Now I'm done with that. I'm gonna see if I can get myself moving here. Good morning, good morning, good morning, good morning, good morning. Sorry about that. A little bit trying to get my technical setup going, and then I had something caught my eye. I wanted to look at it, but it's behind me now. Got 5 minutes till open. Very, very small upside. Probably just going to close flat. So it looks like, pre-market IWM up quite a bit. $3. That's a big gap up. I'm not upset about that. 207. GME looking kind of flat as well. Nothing really crazy here. Kind of looks like it wants to sell down on an open. Just that double topping kind of bounce. Just starting with a higher RSI. But, I mean, it doesn't really make a huge difference at this point. I really don't care that much about extended hours unless it's like crazy. This is already a double topping kind of motion, so probably just needs to find a support. Try again on this resistance. There's not a whole lot that needs to be said about GME that hasn't already been said about GME, so feeling pretty good about it. Are we ready? You know, it's strange because I was up really early this morning, and I woke up thinking about all kinds of other things today. My son, his first day back at school, new school year. It's crazy how fast the summer went by. And then, yeah, man, just really looking forward to seeing how the day goes. And I woke up early, so I thought I would catch some Olympics this morning. And they did a little like, I really want to watch the men's volleyball, Poland versus USA. I think men's volleyball, I don't know why, but I really like it. I think just like the energy that the guys have, like they're super pumped. All the teams are. They're like really fun. Like they're not like, they're not too serious. And then I think there's like some older guys there that are in their 30s, and I'm like, oh yeah, they're, you know, kind of like my closer to my generation. And I don't know, like the men's volleyball has been really good. Really good. The match between Japan and Italy, I mean, it's just crazy how good men's volleyball has been to watch. Just like, edge of your seat kind of stuff. And I'm not even like a huge volleyball fan. I'm just like really enjoying it. So their match is coming up today. Yeah. Yeah, it's just like there's a lot of good sports obviously in the Olympics. I've been watching like everything. I like watching I was watching the skateboarding this morning. They were doing the men's qualifying for the I don't know what they call it. Like free skate, like the park. It's not street skating. It's a little different, but yeah, the Japanese-Italy match was really good. That was intense. And the volleyball. So yeah, I don't know. Like I'm not really a big fan of men's volleyball. Like I don't follow it. But I guess that's the benefit of the Olympics, right? It's like you get to see stuff that you don't normally see. Maybe you get interested in it. I'm pretty interested in it now. I think it's really cool. It's the 5-on-5. I hate to say it, I don't really like beach volleyball. I don't know what it is. Maybe it's because they don't pass back and forth over the net very often because there's only two people, so there's like a really wide open field, like a wide open court, whatever they call it, because it's beach. I don't know if they call it a court, but I don't know what it is. Like they just don't seem to. It's like whoever gets the set and the spike first, like usually wins. Like they very rarely like get to it in time. I just find it to be a little too like. They got the ball. They're in control. They're gonna get the point. You know what I mean? Like unless they whiff. But the 5-on-5, you can get some really crazy like stuff. It's like dudes like diving off into the podiums. Like one dude like slammed into the judging table. He was getting a ball. It's like awesome, you know. I love it. And then they're just really fun, like high energy. But I was watching it this morning, and they had so I was up really early this morning, and they had a little thing about baguettes, and apparently, this is according to like the guy I guess who was doing the little mini documentary thing, commercial thing. Apparently, the French eat 10 billion baguettes a year, which is insane. That's insane. As many people as there are in the world, you know, like. That's crazy. That's crazy amounts of baguettes. Crazy amounts. So I was like, what? 10 billion? I had to rewind it. I was like, there's no way. I heard a staggering statistic about like chicken wings in Korea. Apparently the Koreans eat like 2 billion chicken wings a year or something. I thought that was a lot. I was like, what? They eat 2 billion? What? But 10 billion? That's crazy. That's just so much. The baguette. I don't know, man. I just never would have put that number to it. So, you know, like, who cares, Booksy? This is the stock market. We're not here to talk about food. I'm just kidding. I know most of you guys don't really care if I talk about random stuff, but all right. Well, all right. So first things first, let's just kind of get this day going. We're 1 minute into the open. So if you're panicking, don't panic. It's been open for 60 seconds. Yeah, I watched one water polo match. Don't get me wrong. I think that water polo is probably, one of the physically the most demanding things because you're constantly like going. But it's kind of slow to watch sometimes. Like, there are times where it just looks like a bunch of people waiting in the pool, you know? Like, and you're like, wait, who has the ball again? Like, don't get me wrong. This is not me. I'm just saying as a spectator sport, I find it to be harder to watch because I'm like, I just want to see movement. And a lot of times it's like, I just see a bunch of splashing in the pool and I'm like, well, I guess stuff's going on. But I know it's physically demanding. Do not hear me wrong. Like, I'm very well aware. I can tread as well water for a while, but it's tiring. And trying to move like efficiently in water, like in a sport, would be really exhausting. But I just can't find it in myself to like sit through a whole match. I don't know what it is about it, but it's just like, you know. Because, like, sometimes I just look at the screen, I'm like, who has the ball? Like, it's just a bunch of people splashing in the pool. I wish I could follow it better. I'm sure if I played it at some point in my life, I'd probably be better at following it. Like, okay, I kind of generally understand volleyball. I remember PE class, doing volleyball, physical education. If you're not American, we have PE when we're growing up. And then I played some volleyball just for fun in college, you know, beach volleyball kind of stuff, just for fun. Of course, you know, that was a different time in life, you know. And those kinds of things like stick with you though. You kind of know the sport a little bit. You kind of generally know how the flow goes. It's harder when you don't play. You've never played a sport, and it's like it's maybe hard to follow if you don't know the rules. I'm kind of like that with skateboarding too. Like I was watching skateboarding this morning, and I'm like, I really have a high amount of respect. I had friends in like high school who were skateboarders. I never skateboarded. I just couldn't bring myself to get good at it or do it. I think I had a skateboard like once when I was a little kid, you know. Every kid tries something and it didn't work out for me. I just didn't have good balance when I was younger, so I just never really got into it. But I love watching it because I think that it's fun to watch. But they're talking about it, commentators are like, yeah, it's a 360 back tail grab into a, you know, a crooked grind. I'm like, yeah, right. I'll take your word for it. Like, I don't know what's impressive. You have to tell me if it's really impressive. Oh, that's impressive? Okay. That's good. Good to know. Wading, it's treading. I'm not knocking water polo. I'm not. I'm just saying, like, I can't, it's hard for me to follow certain sports, that's all. I know it's hard. I know. Dude, all the Olympic sports, for the most part, are hard. You know, they require some massive amount of skill. No one would say that otherwise. They're just different. Like, some of them are just different in terms of, like, maybe the physicality of them, and then also, like, just the energy, I guess. Like, I just don't really like, I know that it's super cool. Some people love horses, for example. And I'm like, this is nothing against horses. I love horses too. They're great animals. I'm not a big horseback rider or a barrel racer or, you know, horse racing fan. Like, it's just not something I ever really got into. So when you see like the equestrian sports in the Olympics, I'm just like, all right, it just looks like a bunch of people riding a horse through a garden. And then the horse jumps off like a 10-foot wall, and you're like, holy crap, that horse just jumped off like a 10-foot wall. And they're just like, yes, that's a pretty good jump from Seabearer, or whatever their names are, from Squirrely, you know. I think one of them was named like something like that, like Squirrel or something. The horse. And I was like, that's a cute name for a horse. And I'm like, well, I get it. I get that the rider is doing the controlling, but the horse is jumping off the wall, you know? Like, the horse is doing the work. The horse is sticking the landing. I get that the rider is the one controlling it. Don't get me wrong. I know there's a physicality to it. I know riding horses can be exhausting. But at the same time, I feel like I'm just watching horses compete against each other. And I'm like, I don't know, man. It's like watching the dog show, you know? It's like the owners are doing stuff. They're important. But the dogs are the one doing the stuff. Like, they're doing the tricks. The owners are just like there to keep them in line and tell them what to do. And it requires them to be very active and participating. Just like, I mean, equestrian, obviously, the horse wouldn't be doing that stuff by itself, probably. Probably. We don't know. Maybe wild horses 1,000 years ago had their own, like, Olympic Games. And they were occasionally like, hey, let's go jump over that log. See who can jump the highest. I'm like, yeah, right. Sure they did, Booksy. Yeah, you don't know. You ever hang out with wild horses? Because I don't. Anything can happen. It's just like otters. Otters do stuff like that. They have like crazy games they play in the water. Anyways, my Olympic coverage ends there. I'm really excited to see the men's volleyball match today. That's kind of what I was looking forward to this morning. It starts in like 30 minutes, but I'll watch the rerun. I think it's Poland. I've been following most things. I think the hardest thing to follow. You guys are like, I thought you were gonna stop talking about Olympics. Say it's the Olympics. It only happens once every 4 years. AMC is gonna keep trading next week and the week after. The Olympics are gonna be over, in like a few days. And I think Taekwondo starts today too. That'll be fun to watch. I'm excited about that. I'm just waiting to see what's going to happen with this shakeout this morning. Just see where we're going. IWM gapped up quite a bit, like $3. So I wouldn't expect it to hold, but if it does, it could be really bullish, I guess. It just depends. It just doesn't seem like it's quite done here. I could imagine it easily kind of having a double bottom RSI. So maybe the gap fill. 4 to 7, it's interesting. Like those were the two markers I have on my chart. So they were just right off one right to the next in terms of that gap value. But yeah, I mean, but the Olympics only happen once every 4 years and only for like a couple weeks. So if I'm talking about it, don't worry, it's not going to last forever. And then it'll be quiet for 2 years. I like the Winter Olympics, but I think the hardest thing to follow is track and field because the races are so fast. So it's like you don't get to watch very many live events. The only one I got to watch live that I actually watched live were some of the qualifying for like the 1500. And I watched the replay of Cole, what's his name? Hawker, I think. That was an incredible race. He was like 5th or 6th place. And then the last couple hundred meters, he like passed everybody in the field and got the gold. It was like an upset. That was a cool race. But like the only one I got to see was the 100 meter. That was the only one I've seen like live. That was like a big event. And I watched Noah Lyles get ahead of that guy. Spoiler alert. And it was crazy. He just necked him out. I mean, literally stuck his neck out. And it was like 6 guys crossing the line at the same time. And I had a feeling he took it, but before they announced it, I was like, I think he got it. But it was like really close. And they said it came down to like thousandths of a second, which is crazy. And if you looked at it from a bystander perspective, you were up in the stands, you probably couldn't see at all who won. Like it was like everybody was crossing the line all at once. I mean, in the camera, you can see like there's a gap, maybe a stride length between like the people in the front and the people in the back. But really, everybody in that 100 meters, and it makes sense, because the 100 meters is a really fast race. Everybody's like right there, I missed the Gabby Thomas win. I got to watch the replay on that. She won the gold in the 200 meter. I watched Shikari race. She got the silver. I didn't think she was going to get the gold, but I was kind of hoping she would. But I mean, yeah, but those are hard ones to catch because they're so fast. If you don't know when they're racing, it's like, okay, I'm gonna stop what I'm doing like at one particular time of the day to go watch this one thing for 5 minutes, or else you're gonna miss it. It's kind of a bummer. Yeah, somebody said it first thing. They said it was an upthrust that returned back. I wouldn't overthink this. We talked about it yesterday. There's a probability here that we're playing through like another, I want to say pump and dump. That makes it sound really bad, but that we're playing through another iteration. And what we've seen so far is that these iterations have had pretty consistent, and I had a line here early on. These iterations have had pretty consistent kind of dump, pump, drop. And really what you're looking at is not necessarily like a perfect pattern, but there is kind of a 1, 2, 3 ascending pattern here, like 1, 2, 3. It really just signifies kind of a final push before a distributive action. So here's what the goal is here, because I think we're doing it again. I can't be 1,000% sure that this isn't like an early, part of like a number 1 and there's actually more. I think based on the timing and the amount that this is compressing, I think it's safe to say that there's a strong compression here that's going on between these drops. And so my expectation would be that there's going to be a drop but it won't necessarily do what the other ones did, and that's the important part. So at this point, I guess I've seen it enough to know that in order to complete the iterations in a bullish way, or let's just say a reversal pattern, what happens is there's a compression of like a particular pattern. So if you're going like A B A B A B A B, that's fine. You don't want it to go the direction you want to go. I know it sounds weird, but like you wouldn't want this to compress to the upside, because that typically means that it's bearish because you're exhausting the wrong way. You want an exhaustion pattern to go the opposite way, because you want to think about it as like we're basically rinse, repeating, rinse, repeating, rinse, repeating till we're washing out a particular side. So historically, I'm going to say historically because over the last 3 years, it's not that historic, but over the last 3 years, every time I've witnessed a shrinking iteration pattern that's going down, there's a reversal that happens up. Anytime I've witnessed a shrinking pattern that's going up, it almost always signifies a reversal the other way. The shrinking pattern often looks like a wedge, and that's the funny thing about when you start looking at like fractal iterations or whatever. They kind of present themselves as just like a rinse repeat, and we've already known this. Like, people in the market don't need to know the term iteration. They don't even need to know the term fractal. When you see a narrowing spread, it's very, very often the case that each of those ups and downs looks very similar, and you're basically just exhausting, or we should maybe say satisfying, a particular kind of aim. So if you're aiming up or you're aiming down, you're trying to get to a certain target. If you're going sideways, people call that consolidation. You're really exhausting a particular range, and we're doing that. We've been doing that for a while. So this arc, as we see it, this is something we were talking about yesterday in the master fractal idea, is like the rounding is not just these bounces, it's the whole range. Like this whole range has like a rounding action to it. And I don't typically do this anymore, but I used to do I used to go through and do like the arc like this, and I would show you guys like a comparison to what I call like a master fractal, which is just like a model for learning, in my opinion. And those are things that you can see in the chart. But I would do this, and I would look at it this way, because oftentimes, this is what happens, is you get like kind of a build out that curves, and that rounding of the bigger picture. So if we were zoomed way out, this would look like it's kind of rounding up and over. It's like combing through a range, and you want to see that exhaustion is going the kind of the opposite way that you want to go. So I'm actually pretty happy in that regard with this price action, because I think that rounding has, again, largely been bullish. I don't think it's been bearish, and I think that we've managed to accomplish the centerfold, like getting over the center. So you can see like the results of this should be that we basically hit a center mark and then go. But in the end, there's always a shrinking, and I've talked about it quite often. I don't think this is unusual for this channel. If you've been around the block for a minute, you've seen me do stuff. This is something I talk about quite a bit, because this is the end of the sequencing as it occurs in every range. And basically what you see is it iterate, right? Which is this word that means repeat, but it means repeat within itself. It's not like copy paste next to it. It's like within the same structure, you're seeing that structure. And there was a dude on here yesterday who was trying to like school me about this, and I was like, I don't really want to hear it, because he was saying that he knows the way and like all this stuff, like I know the way, and I'm like, nah, I'm not doing that, because I've been around enough to know what fractal iteration is. I don't want to say I wrote the book on it. That's not really appropriate or very humble either. But I did a lot of work on it right early on when I started doing YouTube. I mean, a lot of work, like thousands and thousands and thousands of hours of stuff. And I deleted like most of that from my channel the first year and a half of the work that I did. Why? Because at some point I realized it was kind of like you're running on fumes trying to sort of chase the dragon's tail, and ultimately like what this represents is something we already talk about all the time, which is that idea of like waveform analysis. So like when we're looking at these things, the compression is this. You're kind of building into a particular target in mind, and you're compressing. So I'm showing you an example on the screen right now if you're watching. AMC's at 510, GME's at 21, pretty much flat right now on the day. Neither has moved a single whole percentage. IWM was gapping up quite a bit. It's up 1.45% at 207. But if you're not able to watch, you're just listening, I'm just demonstrating like the cat ear principle, where you have the second ear, as I call it, which becomes very flat. The reason it does that is because there's a lot of chop, and sometimes I call it a foretop, is because you see those markings appear in distinct order, and it's a shrinking, it's a narrowing. So on one side, what often happens is that you get a, and I like to repeat this because it bears repeating. I mean, it's a really important concept. On the one hand, you might get something that looks a lot like a wedge. So people will say, oh, it's narrowing, it's wedging, right? And that's very common. It makes it look like a wedge. On the other hand, normally what happens is that this final kind of build out that you're going into almost always represents like a major. So it's like doing the shrinking into a major. It's like pushing against a wall, right? Like as you're getting closer to this wall, you're iterating and you're seeing the diminishing of a range. And that wall represents like a takeoff point. And it's usually like a major trend or something. Not always. It could be a Fibonacci level. It could be this or that. We have seen that in here. We saw it right back here. This was a really clear and obvious iterative function back here. A lot of times it looks pretty mechanical. You can kind of see it happening. And I was very, very bullish that this was going to turn around when I started seeing it happen back here. And I started looking at the outward movements. And that's part of the reason why I knew where those targets were going to be and that we would hit them in a pretty regular pattern. Because you don't see this unless it's going to turn. Like it just doesn't happen. It's a literal exhaustion. I mean, it's kind of the way I see it. And I don't think there's a lot of literature about fractal iteration to that end. A lot of people will talk about the spread widening or narrowing, and that's similar. Like it's a similar concept. I don't think it's exclusive. I don't think it has to be the same terminology. But I talk about this quite a bit. So the second cat ear is always the place that you have kind of a danger zone of maybe breaking down. But sometimes you don't see it. Sometimes it's visibly hard to see. I can't really tell the structure here at this point. But what I know, and this is the important thing about the underlying knowledge, is I'm not following a fractal sequence like that I have to find where I am in that sequence perfectly. What I know is that this is a shrinking. So if I know this is a shrinking iteration, and I know that the left side and the right side, I know what they look like of these iterations, then I can track it pretty well. I don't have to know exactly where I am in some perfect fractal, combination. It's not necessary. It's just not necessary because you know what it's supposed to do. And that's more about understanding, I think, the behavior of the market as opposed to just, I'm going to follow an ABC sequence until I get lost. So the bigger picture may look like this, and you may just see a lot of chop in here. The smaller picture would have those iterations, and you could see them. So I already know that that's the case here. There's no doubt in my mind that's the case here. And thankfully, maybe in some ways, I was reluctant to kind of go back to this sort of fractal stuff. But occasionally it's good to just remember, like, hey, this is still there. It's part of the way that the market operates, and the stuff that I learned from that experience and that time, like staring at those charts, is not for nothing. Like this is an important concept. This is the sequence as it appears in December of 2021. And when you look here and you look at the side-by-side comparison, you're like, wow, that's pretty similar, Booksy. Yeah, it is. And then you look at the tops and you're like, wow, it's pretty similar how that top formed, isn't it? Yeah, it is. And I know that there's an upthrust right here. You can't see it because, again, it was like one little wick, and the way I did this chart, there's a minor little upthrust at the end. That's why this becomes distributive at the very end. Like I know that's there, and so I'm always looking for stuff like that. And then when you see that, you're like, oh, okay, like this is that side, this is that side, this is that side, right? Oh, it is a shrinking, you know. And I know this is a messy chart. I wish I had a clean version of this still. I just don't. But, you know, it's the same concept. So not to be going backwards and like looking at stuff I've already looked at, but this conceptually came from an idea that I had a long time ago. And I adapted that idea of cat ears because it was kind of funny and easy to remember. That's the only reason I did that, because I just liked the visual of it and I thought it was funny. So I did it. But this conceptually, that build out, is the same exact thing I was just showing you on the other screen. So, you know, I had someone come in yesterday and say, like, they knew what the answer was. They knew what the sequence was. And I'm like, nah, you know, I'm not going to go there anymore. And it's not because I don't respect other people's TA. It's just that I'm well aware of the fact that, you know, this area right here and this area right here, you know, are the same. And it's like, you can kind of go through and try to school me on it. And I'm probably just going to end up taking it back to this anyways. Because no one's ever shown me anything in the last 3 years that hasn't come back to this concept of wave analysis. And at the end of the day, like, that's what this is. You know, it's wave breakdowns and then like wave breakouts. And I'm drawing the little grid here so you can see it. Like, that's what it is. That's the reason that this top looks like this top, that looks like this top, is because it's shrinking the same fractal over and over again. It's an algorithmic play into a particular end that's exhausting the range across. So like, I didn't even need to look at this to know that if it's an accumulation, 99.9% of the time, if it's an accumulative range, it's going to have resemblance to other accumulative ranges that look very similar. It's not complicated. This range is interesting. It doesn't even really have much of a big spring, like overall. There's a micro spring at the end here, you know, on this smaller kind of range at the top, but it doesn't have like a macro spring. So if I were to look at this and say like, try to compare it to something that has a macro spring, like this whole range, I wouldn't be able to do it. I wouldn't fully understand it. I would be confused about why it's going below XYZ level. But that's not what I'm doing anymore. Like, I understand what this is. I understand what it represents. So I'm not asking the question, like, what if this goes below? Well, is it a spring on the big range? It might be. Or is it a breakdown? How do you know what's going to happen at the end? Well, did it upthrust at the end and then go down? Those are not questions that a single, like, fractal will answer. And so there's all these folks that'll say like, and I'm not trying to be disrespectful because I understand it takes a lot of work. It does. But there's a lot of folks that'll say like, I have the answer. And then they get to the end of the sequence or they'll get to a certain part in the sequence and say, well, it's doing something different. They're scaling the algorithm or they're shrinking it or they're growing it. And I'm like, maybe. That's one way to look at it. But at the end of the day, like, that's made it more unreliable for me in the past. Like, when I tried to analyze stuff based on, like, macro shrinking, macro scaling, you know, all this other stuff, you just get lost. And it ends up being wrong. I mean, that's all there is to it. And that's me being wrong. I'm not talking about just the methodology. I'm saying me. Like, my interpretation in the past was wildly off at different times because of the way that I was trying to approach that material. The way I was trying to interpret it. When I stopped doing that, when I stopped trying to interpret it like that and instead started looking at it as, all right, the reason this looks like a bottom, that looks like a bottom, that looks like a bottom is because it's the bottom of a wave, and that, yes, there are these concepts that are very important, but no, I'm not going to go hyper literal. When I started doing that, comparisons become comparisons that are relative to themselves. They don't become comparisons that are ABCD versus ABCD, you know, which it can happen. And that's the thing is like, there's people who nail it. And I don't want to say it's problematic, but it's kind of problematic because there's a lot of people who will like find a sequence and I'm like, hey, you're looking at a bottom that compares to another bottom. You're probably going to be right. If the bottom is going to end the same way, it's going to look really similar on a fractal scale. The problem with that is then everybody thinks they found the answer. They think they know exactly what it's going to be every time. And I disagree with that methodology because I've been there and I don't think that's right. And that's all there is to it. So the guy that came in yesterday was like, let me have 1 minute of your time, 1 minute. It was like trying to sell me on the idea that he had the truth. And I'm like, look, I don't doubt that he found something that's probably working really well for him. And I don't doubt that he's found something that's pretty efficient. But there's a number of times that people have come into our Discord groups. There was this one guy who came in like a year and a half ago telling everybody he knew the sequence. And according to him, we would be up back at all-time highs right now. But, you know, I don't think he would ever have come back anyways. But he thought the sequence that we were in the top of remember the 2020 fractal? He thought we were in those top 2 push-ups. So we were in the middle of those top 2 push-ups. So we should have pushed up again. We never did. And it's like, how do you reconcile that? He would just say, well, it's missing a piece, or it didn't do this because of this or this. And I'm like, just look at it like a giant wave. And then it no longer has any questions. It's like, it's going back to Chest the Creek. As soon as I started doing that, it was like, click. There's nothing else to it. You don't need to make it more complicated. It's going back to test the creek. Is the creek high? Is the creek low? If the creek's low, you might be going low. If the creek's high, there's a good chance that you could build out on it. And that's where we're at right now. Like this sequencing, I'm not going to ever sit here and ever again try to go through this. Does it look really similar? Yes. But am I going to sit here and try to go through this and figure out where we are in this? No. Because this is a shrinking. I cannot possibly know, unless I know the scaling perfectly, exactly where that's supposed to end. And I think that to that end, using the methodology that we do use with the waveform analysis and the measuring of the waves here, I think it's a better way to figure out timing than to try to just guess. Like, I think we're on the 3rd or 4th iteration. We're going to make 2 or 3 more, right? Or we're going to do this or that. Or the compression is, going to end here. Maybe. But Fibonacci time scaling doesn't seem to work too well. And then the other problem is you don't have enough information here. You don't have any information about really the iterations would be starting in the middle for the right side, And then at the end of the day, it's like, well, who cares? Like, I already know what this is. If I think about it just too hard, it's going to just get more confusing. This is that area that I call like a 4-top. It should have kind of a double motion. Usually if it's bullish, it's going to have something that looks like almost a quadruple flush. That's because you're seeing that M shape really exaggerated. Usually there's going to be shrinking. Usually there's going to be an attempt at a spring or an LPS. All that stuff is at the end. And that's as far as I really feel like I need to go with sequencing at this point. I don't feel like I need to sequence it. So I do have respect. People think I don't like fractals. That's not true. I spent years with fractals almost exclusively. It's not that. It's what the nature of them is and how people interpret them. That's what defines whether or not they're useful. And at the end of the day, I don't find them to be that useful. Like it was for a while. I thought that I had it down pat, and then you realize that you're kind of like ignoring the basics of liquidity, supply and demand, and like not understanding basic stuff like an upthrust or a spring really confuses you. I still hear it, man. I still hear people saying like, well, I know it all, but I don't know what happens at the end. Nobody can predict what happens at the end. And it's like, okay, so you're just not doing TA now. We're just going to use a schematic, and then if it doesn't fit perfectly, you can't do TA. Like that's what I'm hearing. And that's not a criticism. I mean, it's not like an indictment like, oh, these people shouldn't be doing what they're doing. But it is a criticism of like your methodology needs to be one that is adaptable. What happens if it doesn't go the way you think it's going to go? Was it something wrong with the sequence? That's what I hear. It's like there's a scapegoat there. Instead of, it's my fault, my interpretation was wrong. I didn't interpret this as a top. Or for example, even though I did, right? I'm not saying I didn't. I'm just saying that as an example, like it's not, the answer wouldn't be, oh, I got it wrong because this was actually a top and I misread it. Instead it's, well, the sequence must just be expanding. you know? It must just be expanding. That's the reason. It's not my fault. It must just be expanding, you know? Well, of course it's expanding. If you got it wrong, like, it's going back down. Like, it's going to continue. Of course the timing is going to be off. Anybody doing TA would say, like, yeah, of course doing that. But to, like, not own up to the interpretation of it and to just say, like, well, you just can't know. This is just one of those things. It's like, well, sometimes that's true. And sometimes it's like, this is the same for everybody, right? Like, it doesn't matter if you're doing one method or the other. You're like, what the heck, you know? How do I interpret this? It takes time to digest, like, moves like this that are crazy. That massive double flush. And we're all in the same boat with that, so there's really no criticism to be levied at all. And by the way, this is like the blind man and the elephant kind of stuff. Like, I'm not the blind man and the elephant. I'm not the guy who sees the elephant clearly either. I'm just saying that there's a pattern to that kind of interpretation that I don't like it anymore. Like, I just don't like the culture of it, I guess, and like what that does to people. What it did to me, like obsessing over the details, it just didn't really help. So if I were going to make a fractal comparison, I could do it. It's not a lack of effort or talent or anything like that. It's a choice to not do it. Like, I don't want to do it because I don't think it would be very helpful. Do I think that this looks really similar? Sure. Do I think it's one-to-one? No. No. And do I think it has to end at a particular time as a result? No. But what I do want to kind of take from that is the stuff I've been talking about, which, yeah, there's a lot I learned from studying fractals. And these are the things that I want to emphasize. Like, the shrinking here is not bad. It's whether or not you know what to look for, right? And that's the thing, is like, I kind of know what to look for now. Doing it long enough that at this point I'm like, all right, typically what happens, I'm going to tell you, typically what happens is that you get a pattern, right? And it just goes and goes and goes and goes until it doesn't. Easy enough, right? But usually the final bit of the pattern doesn't do what you were expecting it to do. So it's like, if you were constantly breaking new lows, which is kind of what we're doing now, like up thrust, break new lows right here, up thrust, break new lows, you want that to not happen. And once that doesn't happen, that tells you that it's kind of over. And if you think about it, it makes sense. If every time you're selling down, sellers are jumping on and they're driving the price to new low, as an example, if that suddenly doesn't happen, it's a very strong indicator, in my opinion, that you have a let's call it a deviation in the sequence, a deviation in the repetition, a change of character, if you will. IWM is in a weird spot, so I see some of you guys talking about it, where it needed to find support at 204.85. It kind of dipped below it, and then it gapped. So right now, 204.47 is a pretty low gap here, and that means that there's quite a lot of space to the downside. If I'm looking at them as kind of all similar, they're all getting these kind of downward moves and this chop back up. It would seem to me that that's not a very efficient way to advance unless you're going to do like what's called an S-curve. I've said it before. I'll say it as many times as I need to say it. The S-curve does have almost always something that resembles a rising wedge. And if you know about pattern analysis, you know that rising wedges are actually typically bearish. And what's strange about an S-curve is that it will have a rising wedge and then it will actually kind of correct at the very end. Usually what happens though is that you get a drop. So it drops the S-curve and then quickly reverses. And it goes from being, and this is not all the time, so it's a difficult one for me to kind of say like, oh, this is exactly what's going to happen. But usually what happens is you get like a narrowing of a range and then you'll get a drop towards the end that instead of it being a S-curve, it becomes like a channel, for example. And this has happened pretty frequently. And then you could potentially continue. So if you think about a rising wedge, think about the concept of it, it's pretty straightforward, right? Your range is narrowing, your volume is dropping. So that shows that there's like a tightening of the trading that's happening. You're not moving as far on the spread, right? The ups and downs are smaller and smaller. And then the volume being traded is smaller and smaller. So it opens a door. You can think about it like opening a door or a vulnerability almost, like a crack, okay? You're opening a door for a potential turn because you're basically not following through on the, for example, in a rising wedge, on the bullish price action that started really strong, it's getting weaker. And that's usually why you see a pullback. And it's not that complex, pretty straightforward. I think most people could rationally understand that. With an S-curve, you still get that same, almost that same rising wedge action at times. But what happens is there's like an attempt to correct and then it's picked back up. And all I could really say is that some kind of a trapping mechanism. You can think about it like a flush in terms of like a shakeout where you're basically just shaking out and moving on. I will say this though, that I prefer to see an S-curve that's a little bit more like sideways and less like steep. So if this S-curve, for example, I'm just throwing it out there, but if this S-curve, for example, on IWM were a little more like flat, almost like a rising triangle, I'd probably be more bullish on it than if it's really, really steep. If it's really, really steep, I wouldn't expect the volume to drop off as much, and especially at the end, you have to be really careful. You'd want to see that that pickup really quick. So at this point, it's easy enough to do. So at this point, what I would say is you would take the just take the bottoms and drag them out, and you can see right here, there's actually a double tap on Monday from these bottoms. Looks like Monday and Tuesday, sorry. From these bottoms that are rising, and they match these two tops. So there is a bit of a channel here, even though it looks like it's rising up to the top of that channel. So I would look at that and say, all right, where's the creek, you know? Well, we know that the gap is down here. That's kind of apparent. The creek itself might be a little difficult to identify, but you can use like a varying amount of methods to do it, right? We could use like cross trend or whatever, and it would indicate probably that you could see it drop all the way back down to 203.69. That would fill the gap and it would hit the bottom of that channel. And then from that point at 203.69, this is just potential. We don't know that it doesn't have to happen, but I'm just looking at that creek and I'm like, yeah, that's where it is. And that matches the bottom and it matches like a rebound into, so is this bullish coming back down to 23.80 something? Yep. As long as it holds, because not only does it intersect this localized area, I mean, you can see it quite visually here. Not only does it intersect this little red creek, it also intersects two others. It fills the gap and it intersects this blue rising creek right here and this falling yellow creek right here, both of which I think are just crosses at this point. They are creeks, but the blue one is the ascending trend from April through July. So you're basically retesting that guy. Okay, so let me lighten this steeper one real quick so you can see what I'm talking about, and I'm going to highlight the one I'm actually talking about so you visually could see it better. That's this one. So you're retesting that. That's a big deal. We dropped it. So if we come back down to 203.80s, then we could retest that. In addition, you're retesting this yellow guy. How important is that one? That's pretty important because when we came down, the first two hits we made were that yellow marker. And it may not seem like super significant when those kinds of things happen, but I always mark them off. Always, always, always. Because they always come back to play. Because you're defining a downtrend in those moments. It's just two hits. It's not the end of the world. It may not be the most important line ever, but you are defining a trend. You are defining like a resistance. And then we jumped it, found support on it, and it tried to advance again. So this is absolutely like a wave right here. So without any doubt in my mind, you know, I'm looking at it like just staring at it right now. I'm like, yeah, that's a wave right there. And notice when we came back down, that's right where we intersected on multiple creeks, this level here. So I'm like, sure, this was at like 208. We broke through it. It would be great to recapture that. Well, guess what? Coming back down to 203.96 would do that. So at this point, you've got what seems to be a 1, 2, 3 creek intersection that also fills the gap. Do I think that bears might want to take advantage of that and drop the price? Sure. Do I think bulls might want to take advantage right now and try to get us back down to that level? Yeah. Why not? You know? Do I think it has to stop there? No, but it would be nice. It would definitely be a bull sign if it stopped there. It would not be bearish, in my opinion. So do I think that coming back down and hitting something like 203.84 is bearish or bullish? I think it's bullish. And I think if we saw that move early today, we could just potentially just rip back up for the gap fill and everything back to 210. This is where things get a little bit more speculative, but I would say that you're going to look at this original jump here, and then you're going to transfer that original jump off the bottom, just in terms of a little micro S wave. I would just look at that jump here and say that's probably as far as we could go. We could go up to 212.64 potentially. What would that do for us? Well, lots of things. Now we're back above the big creek. Now we potentially did what I said here. So you guys are looking at this chart. You see these markers. This is pretty early, but this is what I was looking for. I mean, I drew it on the chart when we came down. I said, look, you need to have it. This is probably on Monday, late Monday when I came in late. I said, you need to have it come back up 207, come back down 204.80s. This has already happened. It's moved up to 207. I really want it to come back down and find support here. And if it does it right here, then I think this is done. And then look at the next move. Push up to 212, come back down, find support at 207 again. Great. Check, right? Yep. Pretty much. Like, that's it. You know, and this is a very, very powerful looking move, and its potential to go very, very fast is actually very good. So I would look at this as an S curve, and then I would basically try to, as best I could, kind of split the middle. And I think it's this. I think it's this middle trend here. So I would say, like, probably by the end of the day today, if this hasn't happened, I'd be a little concerned. But I think that's roughly where your S curve is. It may be like tomorrow. If it's the end of the day, so it's like, well, booksy. You know that doesn't always work very well. No. It doesn't always work very well. So maybe it ends up being a early Thursday thing, not a late Wednesday. And that's typical. I don't know, man. The market likes to do stuff like that, probably on purpose. I don't think that's unusual. I'm betting that anything that there's a sort of a maximized time function, you know, for most of these institutional algorithms that drive the market, that they're looking at how can we maximize the time during the trading day in a particular low to accumulate the most, and then if it exhausts, can we continue to do it beyond the, you know, by iterating and all this other stuff, the function. I mean, it's going to just do it till the range is satisfied, but I will almost guarantee you that somewhere in those codes is this idea that, like, if we can put stuff at the beginning or the end of the day, we're going to maximize, kind of screwing with retail, because that makes it the hardest. So we also have the most volume typically at the beginning of the day. So that's another thing to consider is like, hey man, if we don't have a lot of volume, it may make more sense to do it on like a Thursday morning as opposed to Wednesday afternoon. But anywho, I digress. This is the general pattern that I would look for. So I'm looking for a hit at 203.80s potentially. I'm looking for it to bounce. Could it go lower? Maybe a little bit, but I really want it to bounce here and go up. What happens if it doesn't bounce, Booksy? What if it breaks through? That's actually pretty easy. So again, what we find is that this still forms a channel. It just does it lower. So instead, you use the top, not the bottom, for the measurement on this top channel. So instead of measuring from the bottom where you think it's going to hit, you measure from the top where you know it's hit already. And this gives you your spread, in my opinion, for like possible moves. Pretty straightforward. So that would be 201.13. So it makes it fairly easy, I guess. I'm not saying it's like super predictable, but I would say like 203.80s. I'm not going to give you an exact number because it's like 203.87, but that's a 10-cent window. I'm just going to leave it because it looks like it could be like 203.90 or something, or something like that. So I'm just going to say 203.70s. I'm going to say 212.50. It's close enough. You guys are like, just say it 212.48. Fine. I'll just do that. And then I'm going to say if it breaks down here and goes below 203.80s, it's going to hit 199.69. So it's just going to hit, I think it's going to retest the 200 probably, because that makes more sense to me than 199.69. But that's it. Those are my targets for the day, and a lot of it depends on this 203.80s. So I think if we hit 203.80s and we continue, my expectation is that we're going to go up by end of the day or early Thursday to 212.48. If we don't, I think that the wave will break down and we're going to see it come back to 200. And then AMC, kind of expect something similar here. I think we're going to sell down and then pump up. I did this yesterday afternoon. I was talking about how I felt like it was going to happen all in one day and be pretty fast. So first step here on this little journey is probably going to be that wick down. So I'm imagining that's going to be right here, but I can't be positive. Again, what do you want to see? You want to see it do something a little different. So if it were like identical, I might be a little bit concerned because lately it's been making new lows. I don't really want to go down and make a low at 430 all of a sudden, I want to drop in proportion to what like we're seeing on IWM. If IWM comes down to 203s, that's not like a huge percentage drop. I don't want to see AMC like go way high, way low. Like sellers are doubling down on every downward move, and then buyers are only buying equivalency on upward moves. I mean, that's not good. That's a negative beta, right? We don't want that. So I'd like to see as a weak move. I don't really put a lot of emphasis on this kind of curve function, but I do think it's probable that it would be in a similar spot, like a midpoint on this overall kind of structure. So once again, 485s makes sense. Maybe even a double bottom at 486 totally makes sense to me. I think we skipped just slightly this 482. I think that somebody's mentioned last night it dropped to like 482 and wicked down. I don't know if that counts, but I would have counted it if I had seen it. I didn't count it. This right now looks like a little bit like a head fake. I marked this off yesterday because I said that probably going to get stopped like here, and we did. I don't know. It's just a matter of like where that breakdown is. And like I looked back at the previous one, I was like, yeah, that's where it stopped. See that? So it's, in my opinion, it's like, it's iterative. I don't really need to question that at this point. I'm pretty sure it is. So they're using like a particular retracement, and they're using it based on the hook value when they dropped off that range. And so it comes back in a particular amount. And that's what happened this morning. So you guys have been here the whole morning. You saw this line on the chart first thing. I didn't know if it was going to hit that early, but it did. So at this point, it looks like it knocked back down, and then I'm just kind of waiting to see what happens. If it changes character, maybe it doesn't come this low. You know, maybe that 180 something or 480 something, sorry, was enough last night. But I would imagine that if IWM does not see some kind of major change here and it does come back and go to 203s, which is my best estimation, then I would imagine this comes down and then makes a kind of a flushing motion, not unlike what we saw on these two. Remember, like, this one didn't actually flush very high. It came up to like 515 or something in after hours. It came up a bit, but that was during the earnings call, and then it dropped really far. This one came way up and it had a really easy to read 50-50 drop. I wouldn't expect it to necessarily pump way, way high. But again, what happens if it does, Booksy? What if it hits 492 and it just goes really high? Then I'm looking for a change of character. If it does that and then the next drop is really low, guess what? That's no longer looking like the previous flushes where they basically reversed a pattern of potential S-curve, right? This is like, hey, you've got a potential S-curve here. Nope, you don't. This has got a potential S-curve here. Nope, you don't. If this has a potential S-curve and it happens to do this, and the up is greater than the down, then it almost just morphs itself. I don't even really have to do the work, do I? It just looks like what I drew on IWM. It's basically just the way that an S-curve would normally break. So you've got the rising wedge. That's a given. I know someone said that yesterday. I'm telling you guys, it's the same exact thing we were experiencing here. Like, there's a potential for S-curve. I think it could still iterate low. So I'm talking about two different functions here. One is like a drop that then turns into like a low flush that stays higher, right? And then you kind of do the same thing again. You're like, well, when's it going to end? When's it going to end? You know, I don't know. Maybe Ants Trades was right. Maybe it's going to go sideways in this little pocket till Friday. I have no idea. But I would expect it to not go as low. And that's the key. And then notice, like, every time there's a secondary motion here, every time we've like iterated, we've come back over like the major creek. So I don't have those drawn on the chart right now, but those are the like the build outs for these. So we talked about this a lot yesterday. I don't really have like I don't want to bring up my other chart right now, but this motion right here has jumped over. See that? So look at the way I drew the iteration here. Look at where that middle line is. Look at where 480 is, 482. Notice now that if you do that move and you don't go lower, that was definitely the creek. We're 100,000% sure about that. We watched it course along it for like a day here, right? And then we watched it break down from it and then recapture it. But notice now, if you go back, it just looks like it could be just a back test on that creek. So the iterations are always doing like more than one thing. You know, it's never just like, oh, it's only going to iterate this particular way down. It's like, no. It is going down, but that's okay. What's really happening is you're jumping those creeks lower and lower. So you would be looking at that, and then you can see like there's a parallel. I don't know if that was on purpose, but there is a parallel here. Pretty much perfectly parallel. So I'm going to keep that one on the chart. And that parallel is currently setting up off of the next top here, which to me, again, it looks like same old, like it's iterating the same thing. And it's creating now a series of kind of parallel jumps, and that's good. So every time this is going over, it's actually advancing. You may not see it because of the downside. It may feel like, nah, that's not happening. But it is. It's advancing. This is an advancement for sure. Now, if this dropped beneath here, you guys are like, what about downside? Everybody always asks, like, what's the bear side? Look, this is the bear side, okay? And it's been like this for a few days. It's a hook underneath 480s. It's a drop that does not recover, and that basically turns this lower region into supply. We have not seen this since June. And even this one was pretty weak. I mean, if you look at the motion itself, this is the most time we've kind of spent below in this lower pocket. And the last ones have been more and more intense. So it would be very odd. It would definitely be a change of character, in my opinion, to see this to see this just suddenly have no more buyer support would be backwards. It's actually gained buyer support as it's gone along here, typing on the keyboard, and it just whiffed a bunch of character letters here. You see that? So this would be a really big change of character. To come down and like reject here and then continue. And until that happens, it's not bearish, folks. Like, it's just not. Like, that's a confirmation for bear side. If you're a bear and you're like, oh, I really want this to go down, okay, that's fine. I'm not going to judge anybody based on the way they want to trade it or what their TA says. But I would say that this is the place that I would say, yeah, that's confirmed. You can't convince me of that by anything else that's happened here. Not yet. Except for maybe this. You could maybe make an argument about that move. I would listen to that one. Because I would want to hear what you have to say about this. But everything else here looks bullish as all get out. So I want to see a change of iterative character here. I want to see something new happen. And that's when you're going to know, like, we're about to go flying into an SOS. And it's a really fun thing. It's a really fun thing to witness, but I got to say, like, I don't witness it very often. Even on this one, I thought I was witnessing it here, and it still dropped again. And then I saw it, and I was like, all right, now it's finishing. And I called it, like, a high heel instead of, like, a beak, because it pushed out at the end and then dropped. And, we were making jokes about that, but the the overall like iterative change happening like on a live stream hasn't happened in a long time. I just don't usually see it because it's pretty rare. I mean, it's at the end of a range, and then it usually is hard to spot. And we didn't get to see it back here; it just wasn't there. It iterated until it finally pushed low, and then the next day it was just gone. And you're like, well, I mean, you could have guessed that that was when it was going to take off. And I had a pretty good estimation of it. I mean, I bought in right here and here. So, I mean, I wasn't like, I thought it was going to be done, but I didn't get to see it happen, you know, until it was like already going. So it's pretty rare to see it happen. And I would be pretty excited if we got to see it happen, I guess, live. So we'll see. And you never know. I'm the kind of person that I love to see that kind of stuff, and I like the fast-paced action. It's much more exciting to stream it, but I don't really care either. Like, if I miss it, I miss it. If it's going, it's going. You know, if I take a lunch break and it rockets, I take a lunch break and it rockets. I'll come back when I come back, and it's okay, you know. You guys can enjoy, like, market moves without somebody talking to you about it. And if you already kind of know what my thoughts are, I feel like, well, then they already know what I think about it. And if they care, then they care. And if they don't, they don't. But I've already said what I want to say. So I'm not going to stress about it. I just want to be clear. So I'm not going to be like looking for, you know, this or that. But I do want to see this change of iteration soon. So that's going to be your timing for the week. And I can't really tell you other than I think it's going to drop, and it looks like it is. It looks like it came below. So it's going to test low below this trend. Some of y'all are probably going to be keen to point out that it's a wedge and that you can actually measure that. You can. It's usually like about a 62% retracement from the breakdown. Lo and behold, the 62 retracement is the same as the level I already picked out. So my intuition might have been pretty accurate about that. Why is it that low? It just is. I mean, you can measure it however you want to measure it, but if it's roughly 62% of the height, it's easy enough to think about it like, oh, it's a 618, but then it's transferred to the breakdown point. So yeah, basically it's right at the 618 here at 483. So lo and behold, math exists. Somebody had this mathematical formula from bottom to top here. I mean, that's kind of if it's almost like a given, like that's going to happen. And then why else did I pick that number? Why? Because this support back here, we haven't really checked it, so still haven't checked it. And 483 is the liquid center. I've been saying 485, but it's whatever, you know. It's this pocket region. It's really between like 481 and 492. It's like a 10-cent pocket right here. We've seen it respect 492. We've seen it respect 493, frankly, all the way down to like 481. I remember 481 was a hot number back here. It's not. It doesn't have to be like perfect. If I had to pick one number, I would probably pick 487. But I've been saying 485 because it's right in the middle of that 10-cent range. So if you're wondering, like, hey, the 485, you keep talking about that. Where did that come from? It didn't actually come from the reports on the shorts, although that is kind of interesting. And we did talk about that a little bit. There was a short report. You're like, what? Here, let me delete this one. I'll use a different line. There was a short report from Vanguard back here at 485 or something like that. And it was about, or it was like 479 or something. I don't know. But it was right in this same gap. So there's a gap here at earnings, and there's another gap over here in May. And they announced that they had one of their funds. Okay, so they have like 30 million in shares, unless they've sold since early July, because then they posted it near early July. They still had like 30 million and growing in shares. But they also posted that one of their funds had, at least at this time in May, had a 350,000 short position. And I've been hypothesizing that probably is what's going on here to some degree, is they're allowing their hedge position to kind of reposition, cover, right? Before any kind of major takeoff that rips away the other shorts. Potentially, okay. We don't know. It's not confirmed yet, but that's what my theory is, and it makes sense then that they anchored it around that number, because that's essentially like some kind of a, I don't know. Maybe they opened those short positions here. Maybe they already had them, but that's some kind of a level that they want to have an equilibrium on and like be able to trade around. So I don't find that to be a coincidence. I think there's reason that they did that. I don't know exactly what it is, but I think there's a reason they did that. And that was disclosed maybe to entice some shorts. But I think that largely they've been very bullish. They've been buying way more shares than they've been selling into the market, at least for now. This is Vanguard. But that's actually not where I got that number from. When we came down, I did an analysis on these setups and like these shallow S-curves and how they build out when you enter a range, and where the defining features are for these S-curves, and like what it is they're actually doing when they come into a range, and like what we should be looking for. And what I found is that there was a pretty simple comparison that showed that when you enter a range, you basically get the supply demand marker like right away. And it's essentially like there's this little LSPY that happens right before the final drop. And every time that happens, you're marking off the trading range, whether we know it or not. Now you do. I think it's an institutional marker, to be honest. I think it's some kind of a way for institutions to communicate, like, this is where we're going to be setting up. And the final drop is really more about liquidity and stuff, testing liquidity. But this is like the range that's building. So you can see like they're creating a support and resistance early on when you drop down. And so what we did is we looked at that and analyzed it. I went through for about a day and just analyzed all the ranges I could and looked at how that's played out. And it's pretty clear that like when you end in a distribution, you end up hooking beneath that initial marker. And when you end in accumulation, you end up bouncing off that initial marker, which is another reason why I'm really bullish right now about this range, because we're bouncing upward towards that midpoint, which I think is at 480s. So I've got a really strong reason for it, not just because of some report. And this was marked off again pretty early on when we were in this range. I wouldn't say it was like super early, but it was definitely before this build out. So it must have been in June, which I guess is over a month ago now. So we had marked off the 485. I think that you could have figured it out anyways. It's not like I'm saying like I had some kind of special knowledge or something. It's not really the case. It was more of like I went back through here and I looked at the levels, and what I found was that the 485 roughly was sort of like the golden level here on this particular S curve. And it was a tough one to do because there's not a single level here. Like there's a continual advancement. This is rising, but this is the same motion, you know? So if you're looking at the big picture, it's like maybe hard to identify that as the same motion, but it is. It's the shallow S-curve motion here. It's the same kind of general principle. So when I look at that, I was like, all right, well, I know it's there. And I went in and observed a few different things, and I basically came to the conclusion that it's probably this breakdown level at the gap. And ever since then, I've been watching it, and you can see like it's acted as our supply-demand zone. Like anytime we're above it, we're at risk of coming down. But like notice like every time we've come through here, we've just kind of bounced around that region. As soon as we get below 480s, it's been pretty strong, you know. Maybe that'll change, but once that changes, then you'd have more confirmation of downside. Until that changes, this does not look bad. It looks like we're building out onto the 480s. So that's another big reason why I picked that number. It's like, well, we did hit it here. This would be like a double downward move, and then this would be a retest. So if you think about this as like the support, I know it's a bit weird to think about it this way, but if you think about like 482, 483 as support from back here, then you see this as support, spring, bounce, spring, support. It makes sense to me that it might be one that needs to be checked. So even though I hear this all the time too, I'll say stuff like that and then people will be like, how many more times are we going to go back down? You know, it's like, well, I was wrong about this one. I thought this was sufficient, but they must have found that there were enough sellers here to dig it on lower. I still didn't think it was going to come down here. I thought we would drop to maybe 470s. So I wouldn't have painted this picture myself. I'm not an operator. I can't control the market. Obviously, I don't have that kind of money. But I wouldn't have necessarily dropped this trend. And I don't really know what to make of that other than it happened. I can't really control that. It did go to like a logical place when it bounced, and I wasn't overly concerned. I was just like, well, let's just see what happens, you know, because I don't really know at this point. I thought it was going to drop down maybe to just below like 477, and it would be like right here, and then do it again. It went pretty low. So does that change everything? Not really. It doesn't. It really doesn't, you know. I mean, you could say, no, you know, it does because of this or whatever. I mean, because of now it means you're making lower lows. And no, but not really, because we immediately came back up within the day and closed back into the range. That's what you want in a spring. I understand it didn't open above, it opened below. And that's the only thing that I'm like not cool with. Like I wish they had done it all during regular trading hours. But frankly, like, hey man, you open the day, you close the day back above the range, you know, the market didn't participate in this move down. So yeah, I would be looking at this saying, well, there's the original move. The downward break, if it went really low, same deal as IWM, could come down to 450. That's kind of a breakdown for me. I don't know if it's going to be a breakdown. I'm not saying that, but it may present itself more like this breakdown. But I think that on the big picture, like we're looking at maybe 483. And if you look at where 483 is and you look at the remainder of the S-curve, that takes you up to 561. And yesterday I talked about this setup and how it compared to the previous. And that is the target. Like it's really close to what we were looking for. So mathematically, super sound target right there. So if it's going to hit those and intersect those, it's sometime late today or tomorrow. I think potentially you're up there. Somebody said that max pain's at 5. Of course it is. You know, look, I'm not going to tell you what to do with your money. If you're going to sell covered calls, sell covered calls. That's usually what people are looking at with Max Payne. That's the best strategy to use with Max Payne. It makes good money. Do it. Make money off of it. But I'm going to say this, and I'm going to say it once, okay? There is almost a 0% chance that they're going to tell you that they're going to run through the options chain. I'm not talking about tailwinds or anything like that. I'm talking about on the day that it runs, the Max Payne isn't going to suddenly be like $10. They've never, ever, ever, ever done that. Never. The only time you see Max Payne raising above the price is possibly, right? If you're in like a mid-run and you're still looking for upside, you're already marking up. When we're in the range, the operators are not telling everybody that they're going to run. They will never do that. They just don't. If they do it, it's going to be like the last possible minute. And I don't need to prove this to anybody. Like, go look at the filings for Vanguard. They did not disclose their bought shares until May 10th, the Friday before the move. There was zero indication from Vanguard, right, until May 10th that suddenly they had increased their position by tens of millions or something. There was a few little things. I think Unusual Whales put out an email about it. And they said basically there were a few weird little things that happened that Wednesday and Thursday, and that was it. And you could have attributed that just to earnings, but there was never like an instance where I cannot remember a single time when all of a sudden Max Payne shot like way through the roof and then we ran to it. It just doesn't happen. They're not going to just tell everybody that they're running. So I'm going to say it that way. I'm not going to say you should or shouldn't use Max Payne. I don't think it's a bad indication of maybe where you end up. I've used it a few times. I used it this week. Last week, I said I thought maybe we end up at 550 if you came high and then came back down. We ended up not doing that. We ended up near 5, right? Those are things that happen. We've been at 5 like almost every week because we're in a range. So for people to continue to bet that the range isn't going to break out doesn't really tell me anything except that people think that it may not be time yet. And that's just sort of like the mass population. Potentially. And maybe there's some really big players. I'm not going to sit there and go through the options chain and try to analyze it. That's not my specialty. I'm not going to pretend like I can do it very well. I've done it before where I've looked at open interest and volume on calls and stuff just to see where there could be a ramp or something approaching, but there's just the idea that I'm trying to get across is I don't think Max Payne is ever going to tell you that there's going to be a run. It would be way too easy if on Wednesday Max Payne shot up to like $15, and you were like, what? And then you were like, oh, look, Vanguard bought 1 million calls for Max Payne at $15. I mean, that doesn't happen, period. It's not even something it's a joke for me because I'm like, yeah, they would never do that. They're going to use the options chain to absolutely, manipulate retail however they want to. And frankly, this is another thing that we don't talk about very much, but institutions don't actually trade options that much. They do. They might get puts, to pin a price. They might get puts way out, to prevent a certain kind of run. They might get long calls or something that they're using that are in the money or something that's more common. The stuff like that happens, but if you look at the options chain and just even go look at the Fintel 13F filings, there's not that many calls and puts. There's almost like no calls. There's very few. There's a few here and there from smaller hedge funds. And then I think the biggest put position I saw was Citigroup. Love them. They had put positions a while back. Stuff like that. But those are things that they're just so few and far between. Like if you look at the Fintel, for example, you'll see like 5 over the last like 4 months. I mean, there's just nothing. Almost exclusively they trade in shares and selling shares short. So like, again, like the options chain can be used to interpret like what the general sentiment is. I think that's a positive, and the idea that we're stuck in a range that's whipping around 5 does not surprise me that Max Pain is at 5. Do I think you should sell covered calls? I don't think anything about it. I think it's a personal choice. You want to sell it, you want to sell covered calls and make some money on the shares that you're holding, you could probably make a lot of money during sideways action. A lot. We've had months, that's multiple weeks, at least 8 weeks plus here, that you could be selling covered calls at $6 and you would never have been in trouble of losing, you know, you would have been collecting premium this whole time. Absolutely. But I'm telling you, hands down, what's not going to likely happen is that you're not likely going to rocket all the way up. I mean, I guess it could happen. Technically, it only took like 4 days for us to come way up and way back down last time. But you're very rarely going to see that like, oh, Max Pain's at 5, and then it shoots up to like 14 and then comes all the way back down to 5. Like, it's going to make a more natural retracement. But it's not going to be like, oh, we're going to go up there and then you're going to see it all, you know. It's going to be screwing over shorts. It's going to be screwing over people who have covered calls. It's just going to. Every time the range ends, there's always some people who are caught, you know, in that blowout. I mean, there was obviously going to be a lot of people back here who were still selling covered calls for like $3 or something back here. And Max Pain was like $3 or $3.50 or something, you know, and then it rockets. I couldn't tell you what it was exactly then. Maybe I could go look, but yeah, so I'm not at all concerned about the Max Pain being at 5. If we end at 5 this week, we end at 5 this week. And it is what it is. It would be just like, okay, another week of that sideways. But I don't really feel like at the end of the day, it's going to be super obvious, you know. If we ran on a Monday, this is the other thing, is you run on a Monday, people are going to be scooping up stuff. And this is what happened probably last time, was people were like buying in way late. I mean, Monday into Tuesday, good grief. First 2 days of the week, blowing up. But then you ended the week down here at 450. I mean, week over week, the gain was not insignificant. It's still a big deal. The gain was like 60%. But if you were too antsy and grabbed calls too early that week, you'd have been screwed. You might have looked at Max Pain that week and saw it was at like $10 or something. That's going to change really fast if the move is only going to last a few days. So just be really careful. Max Pain is flexible. If we rocketed up right now and built support, I guarantee you Max Pain would rise and go to like at least 550. It would change. It's a flexible number. So right now, hasn't changed. People are seeing it flat. Makes sense. It's sitting at 501. Max Pain's at 5. Makes sense. All right, I'm telling you guys, this hits 482 and it rockets up. You're going to see that Max Pain rise by the end of the week. Telling you, man. Telling you. That sounds about right. I don't think that we're going to stop. I don't think we're going to go all the way back to 5, but I think we're going to come back down pretty far. We would probably go up. And if we sat there for a week or two, it wouldn't surprise me this time. Just to sit there longer, I think they might try to distribute higher this time. It's just the nature of what I see as a bigger sequence. You know, ear 1 is usually very sharp. Ear 2 is usually a lot flatter because there's more shenanigans in it, if that makes sense. There's like more desire to sell once you can build out a support. They've built out a pretty adequate support here on AMC, and that resistance at like 6 or 550 is going to be like a pretty important spot in the future potentially. But actually, I think we talked about this before. I'm imagining that it's actually going to be like 650 because there was a lot of build out to 650s, late 640s and stuff. And what we found in this previous range is they didn't actually target the top very much. There was kind of like a final target for the top if you looked at certain things. But a lot of the ascending trends were actually pinpointing 415, which is kind of interesting because that was actually, they were like aiming towards a previous, they being like bulls were kind of aiming towards like a previous support. So like 415 was actually a lot of the trajectory here. And I thought that's fascinating because they're really aiming towards like a floor. Like that's the range we want to be in. This just happens and then they come back to the range they want to be in, which is fascinating. So I found there were some similar things here around 615, and then up to 640s. When I went back and looked, there's not really a whole lot of hard evidence for any of that except for this area. So this is the only thing I could tell you is like I think it's 640, 648, 650 because of this. But in theory, you know, it could come lower. Obviously, there's another support here. We've been dealing with this, bonking our heads on like 550. There's another one up here around 730s. Either any of those would be fine. So do I think it's going to just sit up there and then build out and run again? No, I think it's going to come back down. I don't have a perfect retracement value yet. We can always check my math and just see if there's a good retracement value there. If we don't make another low, did I pick the right number? I don't know. We could do it from this bottom, or we can do it from where we think at 485. Probably 485 would be better, 483. I think maybe it's going to go down there today. So let's pick 483 and just see. This is like future tense, so we're speculating. We're not trying to like plan out exactly what's going to happen, but we're speculating about those levels. So I've said 475 seemed pretty likely to me. That was the big one we talked about a lot yesterday. So from 483 to 475, you have a 618 retracement that comes to 740. So that's not 640. You guys are like, yeah, duh. But 740 is a 618, and I wonder. That looks pretty good. So that's your golden pocket retracement if you're talking about just a basic retracement. It's also really close to where this middle support is, which is not, in my opinion, it's not, I say things are like theoretical, but I know in the back of my head that for me that theory is like, if this happens, I'm pretty darn sure this is going to whip around this particular trend, because this would be the wave that you're going to whip around to get like a 50-50 swing. So if we end up at 1475, I'm like, I'll say theoretical because I don't want to sound like super arrogant when I'm trying to be not super arrogant. But I genuinely think that this is going to happen. So like this to me looks pretty solid. And I know I said 640 earlier, but I also said 7 something. Look good as well. That looks really good. That's a previous support right here on this range. So I would think that the goal would be to extend beyond, hit that outer creek. We've talked about this. This is a 236 also on a big ascending channel, but it's mostly about that outer creek hit. Maybe distribute a little longer than normal in the top. So you could have like a secondary buy up. And then I think from there, you're going to see it. I don't know how fast, but I think you're going to basically like start coming back low, you know. I would expect that, and then range out sideways here for a time, maybe going into November. And then we'll see. It's very possible that November is not what everybody expects it's going to be, you know. And I know some folks are like, well, that doesn't make sense. We should be running all the way through November. All I can say is that it's an aggregate thing. It's kind of like data. I don't really know for a fact it's going to do this, but I think that there's a decent chance based on the way that AMC trades that we don't actually continually run all the way through November, which just very rarely is it that simple. A big picture analysis here would say that you're probably going to come back before November to test this trend here, which would then be these two outer points, or maybe even like a little lower if you use these two here, you know, the final hits or whatever it might be, the final flushes. I think it's basically the same area, and you can see that there's a decent chance that November 9th comes around and we could be pretty much in the same spot, you know, chopping here. So if I see some kind of a sideways range, I would say maybe here between like 11 and 750. It seems a little odd to trade it a second time. So it's hard to say. You know, maybe it's a little bit below that. Maybe it's a little bit above that. I don't know. My expectation would be that going into November, somehow we're in this region. So maybe we are below it. Maybe we do a 786 retracement and we do come to like 613. 613, by the way, that's the number that I had picked out as a middle point for everything. And that comes from a kind of a different stance. So if you go to top to bottom here, like where do we think the top's going to be? I had a marker drawn out based on what I thought originally, and I thought it was going to come up to, not originally, but early on, I thought it was going to come up to 1577 or 1576 rather. And when I did that, I was like, okay, well 613 is in the middle. But here's why this matters, because when you go back and you look at this build out, you're like, well, what is that value, you know? You can see what that value is here. Gasp! You're like, what? Mind blown. No, I mean, it's just a channel, right? At the end of the day. But a lot of times what the S-curve, the little S-curve, I call it a bouncing shallow S-curve, whatever you want to call it. What happens is when you get to the end, the outward motion is similar to the inward motion. So you end up with a very similar move. And I had debated whether we got there on the first move or not. I just kind of found myself doubting that we were going to do that. I thought, I don't think we got there on the first move. Like, I don't think that was part of it. I know it extended a little in after hours, but it just doesn't really match. And this to me is really important because the 50% on this swing around, it's almost a perfect 50-50, is right at that $18 mark. And that's the... it's not the perfect offset value here. That's the other thing. It's kind of a little off. But it's interesting. Like, there's a lot of fun comparisons you can do with those drop downs. But I'll just say that normally after that S-curve is completed, you do bounce back about this amount. Can you prove that, Booksy? I can't prove it, but I can demonstrate that it's a very reliable form of measurement. You know, when you look at like this breakdown here to the initial drop, and then you look at the breakout, you're like, well, dang, those are pretty much exactly the same. That's one example. I could go through like dozens of these and try to show you that that's true. I did a video a long time ago called falling diamonds or something like that, falling diamond accumulations, where I studied this idea of like a widening and then a narrowing into bottoms. And I thought of it like a diamond pattern, and I thought of intro and outro trajectories, and I think it's fairly true. I think that there's a real science to it, where the introductory trajectory is pretty similar to the outer trajectory, and then the distance you travel is very similar as well. What's interesting about this is if you look at something like this as like a micro example, notice that the 50% marker right here ends up being pretty close. It's not perfect, you know, it's not perfect. I'm not saying it is, all right, but it ends up being pretty close to spot on. I think I made this a little too small. So let me make it more precise so you can see it. It ends up being pretty close to like the retracement, which is interesting. I find that to be fast. It's basically like a quarter system. So like 1, 2, well, third system rather, 1, 2, 3. So like 3 parts here. So the retracement probably makes sense. When you look back on it, it's probably, yeah, 2/3, which is a near 618. It's a golden pocket retracement in reverse. Pretty fascinating. So this is a very measured move in this initial S-curve down. This first drop is essentially that value. And then what's cool about that is that when you look back on it, you can see like, oh, it's just a trend. So they created like a wave, right? And then you can see that trend breakout here on that wave. It's pretty fascinating. I don't know. I think it's interesting. So one of the things that I kind of like speculate on just a bit is like, well, what would that look like for AMC on the big picture if it's doing something very similar? And I think it is. I think it's a really similar setup. Instead of trying to like do some kind of a fractal comparison, which really wouldn't give you that number anyways, we can use math. And you can find that number. I think it's there. So this is the first time I got a number was like 576 or something because I was doing this. But it's interesting because this top is at 1819. And when we did our thing yesterday, we found that was a possibility, you know, to come up a little higher. We used a couple different measurement tools. And there was one outer lying creek here that goes higher. And 1819 is pretty close. And then I don't know about 618 retracements, but I'm going to guess it's pretty darn close if we did the math right. All these numbers are kind of in the same spot, aren't they? It's like really tight up here. There's just so many good measurements. Pretty cool. So look at that 618. It's like $15 almost exactly. So where are we going to go, Booksy? Oh, $14.75, I guess. I think the first move, and I talked about this a while back too, a long time ago. This was before we ran. This was way back here or something. I talked about returning back to 14 since the beginning of the year, but when we started developing this downward motion again after this initial breakdown here, I went and reassessed some things. I was like, well, I had 250s as a low for this wave, this big wave. 250s was like as low as I thought we were going to go. I mentioned in that video, I said 14 and then maybe 1 because that's a bear target. But if you actually watch the video, the title itself was kind of cheesy clickbait, to be fair. But if you actually watch the video, I talk about the wave and I said 250, like pretty clearly. And it's fascinating to me because it hit 250, but it hit it like way differently than I thought it would. I thought we were going to pump up here and then drive the price low. So basically this kind of a motion, here's what I thought we might see, is this kind of a motion up to like 14 and then drive the price back down. And instead we didn't even make a push up past like 11. And I should have known when we came higher here, and I did say it was going to come back down to like 6. I was like, well, this doesn't look good because it pushed higher. But that was a long time ago. Anyways, I'm sounding defensive, but I remember thinking like it was probably going to go to 14 and then go back towards 250s. And I said that technically there was a bear target at 1. If people wanted to know that clearly bears were still very bearish on AMC. People took that and ran with it because I got asked for a long time. People kept asking me, you think it's going to go to 1 still? And I was like, no, I never thought it was going to go to 1. I just identified that as a bear target. It was still there. I didn't think they were going to get there. That wasn't my opinion. It was just like a math target that I found. And I was like, crap. They have a big S-curve target to 1. I never thought it was going to go there, though. But anyways, it's kind of my own little thing now. I'm like, well, maybe next time, Booksy, you don't title your video like that. Because some people only watch like 2 seconds of your video and then tune it out. You don't want to be asked about $1 all the time. You shouldn't talk about $1 in your video title. You dummy. Lesson learned. I won't do that again. Yeah, I don't don't find this to be unreasonable at all. Like, this looks like a really clean 618 retracement. It looks like a really clean intersection of the creek. It's perfect, guys. I mean, I really hope this does happen, and that's not really a technical thing. You know, hope is not a technical thing. But I really do hope this does happen, because it's been way too many good leads for this, and I feel frustrated already that it didn't happen earlier. But I'd be pretty annoyed if we didn't get there and we just left it on the table. This is not a simple build out. This is like a really complex build out. And at this point, I'd be pretty annoyed if it didn't happen. Pretty annoyed. I think 239 was the low. What a weird number. Anyways, so do we have some kind of a confirmation here that this is going to go all the way up there for sure? 100%, 1000% sure it's going to go up there. I wouldn't say that, you know. But I would say that there's a lot of evidence that 1496, 1475, you name it. This is the pocket, y'all. I'm like almost, I could not be any more sure than I am. So if it doesn't happen, it just doesn't happen. But in terms of like a technical readout, I mean, give me a break. All the things that I normally look for in a move are here. So I would be just absolutely like confused and appalled if it just didn't do it at all. This is another one. Oh, man, this is a strong move. I should have done this a long time ago, because I did this when we did the comparison, but I didn't do the fib retracement. So I got 1570s because I was using the box tool. But the fib retracement may actually end up being a better indication, since the box tool is more of an like poor man's approach. It was like a poor man's way of doing the measurement, was just to like sit there and high of 4650. So it's definitely 4650. Yeah, so I would say poor man's way of doing something. Anytime I measure with like boxes, you're just kind of getting general percentage measurements. So like, it's pretty challenging to make it like perfect. You can do it, I guess, if you were like snapping them and perfectly measuring it out. So my point was that the 613 is another one that I was watching for a potential pullback because of that. That being, again, maybe a midpoint on this whole area here going across. So talked about that a while back, so I just wanted to recap why I thought that might be the case. Yeah, I want to look at GME. I'm sorry. I know you guys are like, dude, he's talking about AMC like nonstop. I'm pumped, dude. I'm pumped. I'm ready for it. So let's see. Maybe the way in which I did this line needs to be modified, because I don't want it to be like imprecise. I think I got it pretty darn close, but it looks slightly off. Just slightly when I zoomed way in. So let me do this again. Whoa, Booksy being all technically advanced. See, I don't know if I used Big Creek. Sounds like the name of my monster truck company. Big Creek Monster Trucks. Monster truck rallies around Big Creek. Why'd you name it Big Creek, Big Bubba? I named it Big Creek because I live on Big Creek. Of course. That's an awesome name for a monster truck company, man. Awesome name. Just awesome. Dang right it's awesome. It's the bee's knees. You couldn't be more awesome if you hired freaking Steve Jobs to make you some awesome sauce and put it all over this awesome thing. Dang, man. So awesome. You're so awesome, dude. Dang right I'm awesome. Awesome possum. So here's a problem. There's a weird kind of delay, I suppose, Because if you were to look at this just strictly from the point of view of position on that last hit, it would have been yesterday, and I already mentioned this, I'm kind of like beating on the same drums here, but it would have been the intersection would have been yesterday. I wonder if the concepts of timing, again, are more about, I mean, who really cares, though? It's not like that different. I care, Booksy, I care. When is the monster truck IPO coming? Soon. Soon. It could also be that I'm using the wrong top. I don't know, you guys. I hate to be like this. So if I'm using the wrong top, what that does, just thinking about geometry of it, if I drop this down or even down a little bit and out for these other two tops, is I lose time. Like time changes pretty dramatically. So 4650 negative 1424. Oh, okay. Why does it do that? So what I'm going to do is try to create a second one here. You can see like Big Creek. Sorry guys, I got that. Just love the way that sounds with that accent. Big Creek monster trucks. Big Creek. Just enjoy that sound. It's like luxurious monster trucks. We're the Cadillac of monster trucks. You tired of being stuck in a bar cage in 1,000-degree heat? Our custom-made wood and leather designs will make you super comfortable while you're tossing and turning in your monster truck. New business. Luxurious monster trucks. Sell them to like millionaires who have nothing else to spend their money on anymore. It'd be like, no longer will people buy yachts, they'll buy monster trucks. My monster truck has 37 cup holders. It can seat 45 people. It's got a movie screen in the back so you can watch movies while you're driving around in your monster truck. Dang, man. Get me a monster truck like that. Shoot. I'd sell one of my kidneys for that monster truck. Me too, bro. I'd sell 1 million of kidneys. You only have a couple kidneys, man. Don't you know anything about them anatomies? Yeah, I know all about anatomies, bro. I remember taking that in high school. We didn't take no anatomies in high school. All right, that's enough of that, Booksy. Losing your audience with your monster truck dribble. Well, maybe it's not the audience you need. It's not the Booksy that you want, but it's the Booksy that you need. Just honey butter for the soul. Honey butter biscuits for the soul. Oh, Lord have mercy. What else am I supposed to do except make fun of myself while I'm charting? I mean, there's nothing else to do. I'm sitting here snapping lines on a chart. You're like, just keep talking. Just keep talking charts to me, Booksy. I don't want to hear the monster truck stuff anymore. All right. You know, it's not that significantly different, which is kind of nice. It is the August 14th. So we had mentioned that before. Like, I could not remember why August 14th was important, and I was stupid and kept saying, I didn't mean to say stupid in like a mean way. I was just saying, like, I kept thinking, like, why did I think there was like an FOMC on August 14th? I think it came up because of maybe GME earnings, and then there was something else, you know. I don't know what it was, but there was something else about August 14th, and I was like, dude, the 14th is important for some reason, and I just couldn't put my finger on it, but my monster truck runs on kidneys. Shoot, man, let's get the extended family out here. We all donate kidneys. We're going to get one of them luxury monster truck yacht things. I love it. Love it. Let's do it. We all donated our kidneys. It's not donating if you get paid for it, though. So there's that. Dang, man. Coming at me with the logics again. You can sell your, what do you call it, plasma, which apparently hurts really bad. I mean, I don't know. This looks pretty slick to me right here anyways. It's slightly off, but it's close enough. You guys are like, slightly off? I mean, like, within a penny. It's not even worth bothering about. So I kind of like this one, too. This is a nice target. So that's more like August 14th. Maybe more realistic now because of the fact that, I don't know, that August 6th has passed. And we're not at the top, so but it could be, again, this indication of bottoming and stuff. The trajectory methodology to try to find targets is it's pretty difficult. So I don't pretend like it's some kind of perfect tool. It's not at all. So I feel okay with it not being 100%. I mean, this is within a week. That's pretty good. Yeah, I like this. I like this drop. Let's get it. Let's get that 480. Let's do it. I'm so ready for it. Yeah, so I suspect there's going to be much tribulation. Now I suspect there's going to be some sideways kind of stuff after. I don't think this is going to be like last time. I could be wrong, you know. It's not impossible. I definitely could be wrong. But I feel like there's going to be some sideways stuff this time, and that I don't know why exactly that is, except just that normally on the second one it's a lot more choppy. So I also wonder if coming back down, if we were to go that high, if coming back down through this previous support level wouldn't be a little more difficult this time. So previously we kind of opened and closed right over it, and it really wasn't much of a challenge for us, but it was already selling down when the market opened. I mean, it was already coming down, you know. But this would be different because you'd be up high. I feel like this is right because of a lot of things. I mean, look at that. That's beautiful. Right at that 236 at 1133. That's right at the top. Ugh. This is mathematically just so good. Gosh. Darn it. Why is it so good? I don't know. It's just good. Yeah, and then the 0.5's at 484. And then the 618 retracement. So you'd have some kind of like I don't want to say S-curve, something like that. Sideways action down. And that could actually take quite a while in theory. I have it pretty short here. I suspect, though, it's going to get sold down regardless. I think it could take a while, maybe a month. And then, not a month, but, you know, a few weeks is what I mean. So after the top, coming down for like a week or two is not a big deal. That would be your S-curve. I'm sure that's like, you could find like a 50-50 here around 740, just going in reverse. Yeah, from the top, that 50-50 at 740 goes right up to that marker, the 618, which makes sense. But it doesn't make sense at the same time, because if you think about the way we measured this, a 1496 50-50 would take you around 1054. You're like, why doesn't that make sense? It doesn't really make sense because I'm measuring not from one to the next. Like, I guess it's complicated. I don't know, because it ends up being the same value. Like, this bottom would have to be in the right place for that to work. And so if we do bottom at 482, it's in the right place. It just works really well. Yeah, I suspect we chop here. We may actually bounce once and then go through it like slower, and then use like that momentum to sort of drive back the price. it wouldn't really shock me too much either. Yeah, and then this maybe doesn't come all the way down. Instead, it bounces out and then comes down again. So you got like a creek cross, come back down. That retracement looks solid. Seems right to me as well from like a wave perspective, because you would come across this wave like 50-50. Dang! This is a nice schematic. Sorry. I love this kind of stuff, but it never, you gotta be fair, like this never works out. Like I wish I could say it's worked before. I just can't, it just doesn't. Like I would love to tell you that I've been able to do this perfectly before. I've gotten pretty close, but I've never been like perfect. But this is a really nice schematic going up to like 1475 to 15. I mean, it's super tight. Like it takes you back all the right ways across the midline here. Like it's super slick. That's perfect. That's a perfect 50-50 cross down to 743. I mean, just really nice. But in terms of like how you get there, that's another question, you know. That's a question for another day, I suppose. We won't know probably till we start building out the creek right here at the very top. You guys are like, oh, we're definitely going now. Is that what you're saying, Booksy? I'm just saying, if it goes, we would know. Once that first initial motion happens, you should be able to find the creeks pretty quick. But I'd be willing to bet this is fairly accurate. I think this looks like a good rotation. I could definitely see this as a strong possibility. Yeah. Strong possibility. That's a strong rotation S-curve. It's got the right movements right around the middle here, right around that supply zone. It looks really nice. How quick could the run happen? Just a matter of days. It's like this one, but maybe a little longer. If you look back at most of our runs, they've been within a couple weeks. The longest run we had, I think, was the January run. It took like 28 days. But almost every other run we've had has been, I think, less than 2 weeks, which is less than 8 trading days. This is the fastest I think we've ever moved that quick. So I suspect it's more similar to what we just experienced. 3 or 4 days, not 8 or 9. I'm just saying, like I used to look at those numbers quite a lot, and I remember them being like about that much. I might be a little off, but that's the gist of it. So yeah, don't quote me too much on that one. Just go look. But I think most of them are about right. They're definitely under a month. It doesn't take that long to run. I think this run itself, it would have to move within a week if it doesn't start this week. So a lot of people are thinking it's not going to start this week. I'm of the opinion that it kind of depends on your definition of start, because I think that this could move into an SOS this week and get going and have a really strong showing into the Friday, as opposed to chopping here and iterating more into Friday, which, I mean, folks like, I think Ants Trades was saying he thought it was going to say choppy here, just for whatever that's worth. Like someone mentioned that. I could see it if this continues to iterate this way, like it has been doing. If it keeps doing that right here, sure, you could like boil it into Friday at 485, but then you would expect it to boogie like super fast and basically be there in like 3 or 4 days. But I think that it depends on your definition of move. If this is the bottom at 442, it's already moving. It already moved over 13% or whatever, you know. And then if this is the bottom at 483 and it ends up going into the SOS, I'm going to say it's already moving. I think that's part of the markup. Once you hit that spring, you're in a different phase. You're starting a markup phase. I think officially, like Wyckoff calls it phase D, and then phase E might be like the actual exiting the range. But I don't know. I haven't looked at that schematic in a while. C is the spring area, and then the thing about it is like it just depends on how you want to define run, because like a lot of people will measure from the bottom because they're like, well, that's when it started. I like to try to see where did it actually start going into that And some people will be like, well, you should measure from the SOS, you know? I don't know. I think you can measure from all three, and you're probably going to get decent numbers at work, because it's sort of self-fulfilling prophecy stuff. Like, if it's there, it's there. It should work. Uh-oh, we lost it. We lost it. We came back. Yeah, it's not a here's why it's not easy to predict, because the ending is like ever evolving. So you're constantly getting more and more data, and it's easier and easier to pinpoint, which is why I think we have it, why I'm more excited now than I was a week ago. Because a week ago, I was still thinking like it still looked like August, you know, like it did not have an acceleration that looked like it was speeding up or something, like, or that it was somehow going to be sooner. And the earliest trajectories that I was getting were like in the 6s and 7s over here, like from this early area. There were some that were really steep, that were going like way, way up early on, and that would have been like a stronger reaction on the initial pullback. So, for example, when you look at the January move, it had a 618 retracement afterwards. You might look at that and say, wait, what do you mean? I mean, after that sell down to the creek, it actually retraced back up 618, so it's very high. GME actually did that. It did. It's still chopping along that creek, guys. It's like sitting there between this pinch point right here. I don't know if you can see that, but there's like a little pinch point between two trends, and it's kind of right there right now. So on GME, it looks like it's trying. But this is healthy. This is a nice stair step up. Little M here. It's nice. But what I was saying is like on the retracement. So if you look at where it positioned itself after the run, we didn't have like a strong. I wouldn't have expected it to keep running. I just thought we might retrace higher. And this actually has a much higher retracement. You see that? See, like pushes way back up. It came back low again, granted. But in terms of like the overall move, this retraced really far. AMC did not. AMC stayed flat. So I had originally thought there could be a retracement higher. By the time we got to that Roaring Kitty thing, I was like, meh. It doesn't look like it's going to go. And that was kind of that. It's going to stay low for whatever reason, and then it did. But that was when I initially got out of most of those early options that I was trading. I was like, I'm not going to trade out. I'm going to trade out of them. It just didn't look right. So from that point, you're just waiting and waiting and waiting. The problem is with estimating targets early is you have to make sure that the big picture is in line with the small picture. And early on, I just didn't really I felt like I didn't have targets that were, aside from this one in July, okay, this was the only one that I felt like this was a possibility, because there was a lot of, again, trajectories that could have lent into that run. Aside from that, I didn't have any others. So once the July one passed, you're like, all right, there's nothing till August. And so ever since that one, I've been very much like, frankly, I'm kind of sitting on my hands. I'm not really doing a lot. I haven't really traded AMC at all. I'm just sitting on long-term contracts. I bought a couple for cheaper here and there, and that was it. I'm not really trading it. I'm just kind of waiting. I could have traded swings, but I didn't want to do that. I waited a month, you know what I mean, for the trade. So that's something that I want to stress, because I don't have a whole lot of guidance after August. Like if we don't go where I think we're going to go in August, we might be in this situation where we're looking at the Glenn Miller October kind of thing. And I don't really want to go there just yet, because I don't really know how to find that. And if we drop down, then it changes a lot. That's kind of the one thing I was thinking, like if we go down, maybe that October makes more sense. And that's about as far as I went with that. It was like, all right, I could see October if we drop to 3. It makes perfect sense. Because it's there. The build out is there. It could definitely be possible. But we haven't yet done that. We've not confirmed any bear side. So I've been hesitant to alter the target from this early August until, frankly, now. And then
I feel like there was like something that came up like a week ago that was talking about the overlap into the 13th and 14th. And then for some reason I got really confused, and I thought that for some reason, I don't know, I thought there was an FOMC on the 14th. There's none in August. I don't know why I thought that. I feel dumb because I said it like during a stream for like an hour. I was like talking about it, and then someone was like, there's no FOMC in August. And I was like, what? I went and looked, and I was like, oh, no, there's not. Why am I talking about August 14th then? And I still couldn't really put my finger on it, but it came up again today, so it's here. So the window is from the 8th to the 14th. Within that time period, it could run in a matter of 2 days like it did last time, or it could take that full week. I mean, if it starts on Monday, it could be, or if it started like today. Hey, hush. Man, cat, why are you so loud? You don't know? What are you howling about? You're howling. You need water? I'm trying to get my attention. I think they need water. Hang on. Let me make sure my cats are hydrated. Alright, I hear you. Yeah, you don't have any water. Well, I appreciate you telling me, I guess. I should be thankful. Otto's the one that wanted the water. Do not put your paws in it, cat. Don't do it. You know what I'm saying to you. They're not the smartest, but yeah, I'm just a crazy cat lady. That's right. It happens when you happen to have a lot of cats. All of a sudden, you just become a cat lady. You turn into the trope. It's like impossible not to. It's because, like, in order to manage and relate to cats, you have to just... Oh, don't do that. That's not what I said. Keep it PG, man. Keep it PG. There's kids. No, there's no kids watching. I'm just kidding. There might be some listeners out there. So, yeah, this move right here, I think, is... really important for us right now. We're in a really good spot. And I just don't know, like, speed-wise, if you ask me, like, well, how long do you think it takes? I don't know, man. Like, I thought we'd be taking off Monday. We kind of took off, but it was weird because we dropped really low. We ran over 10% Monday. Like, it was a big day. We ended green. Huge deal. And we were down 10%. You know what I mean? Like, we were really low. So we ran really far Monday. I mean, it didn't seem like it because we were back in the same spot. Tuesday wasn't really, much to say except setup, but I'm like looking at this like on Tuesday saying, well, I think maybe Wednesday, because it could be like here that you get the breakout. Now I'm looking at it and I hate to be like, oh, now it's Thursday. It's like, well, naturally, like if you're bad at timing stuff and it just takes longer than expected, you should just add a few days. So at this point, it's probably safe for me to say like it's going to be next week, but I hate doing that. It's like that's frustrating for you guys. I really don't want to do that right now. I just want to focus on like what's happening. If we see the move, my expectation is you SOS. I would be very happy if we were at 550 this week. I would be really, really ecstatic if we did not iterate all week and instead we went ahead and made the move and we pushed up, and we advanced. But I can't promise that happens, So would that be the best case scenario for me? Yeah, I think that would be excellent. Based on the math, is that possible? Well, we'll see. It almost seems more likely that you're only going to come up to 560, but that could be an SOS. It's just a matter of perception. Did it push resistance? No. I'd rather be above 575 at this point. But again, maybe it's just a matter of perception of like, well, maybe we need to then have another iteration going into Monday. So you end the week at 550, but you're ending it by chopping, here. And Monday you do this final drop and push and just go. And then it's like the iteration just moved higher. So the push and then drop, and then the drop no longer goes low. So maybe it'd be like this, and then it just takes off. Sure. And that could be like as simple as it needs to be. My thought is just that I would like to be up closer to 550 if we can this week. That's kind of my first step. I had it originally measured it yesterday and thought, hey, it kind of looks like it should be up here around 550 today, Wednesday, but it was like right on the edge. So it would be like Wednesday in the afternoon or Thursday morning. The way it's panning out, hard to say. Hard to say. I think GME is going to run with EBET came back down underneath 4 cents. That's that crossing. I think it's going to run with it. I think their setup is actually very much the same. There's a difference in like the position of them in terms of like where that breakout is happening, but actually it's very similar. Because if you think about this is the place right here. I know it's a little difficult to read my charts. I get it. This one especially has gotten real messy lately. We'll try to clean it up here and there. I'm going to get rid of this one because we're above it. Yeah, get rid of it. I think that on the whole, that this has looked pretty positive as a spring action. And if it can manage to just jump the creek here, it's done. Well, if you think about that in combination with AMC, like let's say into Friday this week, okay? So Monday is right here. It's right on this green line. If you look at my chart and you don't know where Monday is, it's right there. All right, that's Monday. If AMC were to go up above 550 or chop above 550 or whatever, it's basically jumping the final bits of its creek. Correct? We're saying that's probably the SOS area up here. It is. So it's advancing. It's finishing, right? If GME were just to advance up to here, it wouldn't be enough per se. But if it managed to make the move Wednesday, Thursday, Friday, and it ended the week here, even if it were just as weak as it could possibly be, I'm talking about the lowest place it could be and still be above the creek. 2230s, 2240s. If it's right there at the end of the week, then technically it's above its creek, which means that like anything that you're now no longer, necessarily bound. Now I've seen some people charting it saying that I saw a pretty good chart in the Discord group. They see it coming up to like this 23, 24 area and then rejecting. And I don't disagree that that's a possibility. I know you guys might want me to take that apart if you saw that chart, but I don't actually disagree. I think that's correct. I think if AMC and GME have a problem and they don't advance, the AMC goes into like a head fake. GME goes into a head fake as well, but it's different. It's like a hook. See the difference? And then this goes into another correction wave. Okay, but if this is correct and it holds, then I would not expect there to be any serious delay. Just like AMC, you're going to just pass right through. All of these other levels stay the same. You just scoot this stuff over a little bit. Basically, this from Friday or Monday, whatever you want to say, would then be able to go all the way up to the top for an SOS, Monday or Tuesday, and then continue up, past that point, et cetera, et cetera. You see the point here I'm trying to make. So like these levels don't really change anything. Like they're not there to be time wise. They're not dependent on that. So the levels themselves are basically levels that I've picked that are the most critical for confirmation. It's pretty straightforward, and that doesn't matter if it's now or later. So it's not hard to then imagine this going up and passing above these levels fairly quickly in rapid succession, easily over the course of a few days. And again, running into like the 14th, totally possible that this hits the 14th and it's at 33, you know, and I wouldn't bat an eye, and that would be like them running together. But that's not fair. They're only going to 33 in your model. Well, it is what it is. Maybe it goes farther. I hope it goes to 50. But right now, like, I think that it's still setting up quite a bit like what we saw in June, and to some degree, and it would just depend on what happens in the first few days of the move. If we move rapid fire over a couple days and we're already at like 33, I would be more inclined to say, yeah, it's probably going to continue, you know, because this could be a potential termination point or a potential launch point, depending on how you think about it, and then that changes the timing. But it either way, like, gives you a sense of timing. So we would have an idea, you know, if this hits 33 on August 14th and AMC is up here at 15 on August 14th, I'm not going to sit there and say the GME is going to just continue and AMC is going to break down and go backwards. Nor am I going to say, oh, GME is going to continue, therefore AMC is also going to continue. Is it possible that something like that happens? Sure, it's possible. I just don't think that's what's going to happen. So I'm not going to bend one for the will of the other, if that makes sense. Like, not in this case. I think that if we only came up here, we only came up here, you know? If we get up to 37, the creeks are higher, if it's possible. We get up to $37 or something by the 14th. I would be like, all right, that's it for now. And you guys would be like, what? And I'd be like, yeah, I don't know. Yeah, it wouldn't make any sense for me to advance past there without some kind of a good reason, you know. Maybe the whole market runs and there's some kind of a major reversal, and maybe they announce rate cuts. Like, I don't know, you know. I don't think they would do that, but anything's possible in the market, okay? I'm not going to leave it like a closed door. It just depends on how quickly it goes, I suppose. So do I think they're basically in the same spot setting up for a run? Yes. But I think one is running into probably more of like just a localized distribution, like an upthrust, and the other would be running towards not necessarily a new all-time high or anything. Frankly, and again, this is just sort of going back to the idea of like, why are you not as bullish on GME? Frankly, like, I'm still really bullish on GME, but this is well above where it was, you know, years and years ago. It never made an all-time low. And if you think about what GME is doing right here, it's testing ranges that it's sitting above its, I mean, just look at it. It's not, I don't have to like over-explain it. It's sitting high, you know, on these relative to itself, and it's definitely different than AMC in that regard. AMC is not even broken out of its main creek yet, and GME definitely has broken out of its main creek. So conceptually, like, they may have different paths, they may run together when they run, but I also think that they have, the outcome here is different for both, because they're not, even though if AMC runs up, you might say, well, that looked like a bigger run because it moved over the previous top. Yes and no. Number value wise, it might seem like a bigger run. It may end up being percentage wise pretty close, you know. This is a 200% move, 190. It's not as big as the first one. Again, this concept of like that secondary move not being quite as large. And you might say, again, that's not far enough for whatever you want. I don't know. But you go back to GME and it's like, yeah, I know it's not exactly what you wanted, but, you know, from the bottom here up to the top, that's still close to like 100%. And you're like, that's not enough, Booksy. I don't know what to tell you. Maybe it goes back to 50, you know, that would change things. Maybe that's closer to 150%, but that is closer, that's like 150%. That's still a lot It's still a lot. And if you think about the number value in terms of like purchasing power, probably the same amount of money, because this cost what, 4 or 5 times as much as 4 times as much right now as AMC. So I don't really think that purchasing power, like money wise, it's not that different probably, even if the percentage is less. And then where are we in the scheme of things? Well, GME's way above its gap, or way above its trend. It's major creek. AMC's still below it. We haven't even tested it yet. You do whatever you want to do with your shares when it hits 15, and you commit to it, and you recognize that it's your decision to make, and good or bad, you stick with it and you deal with whatever happens. If it's great, great. You made a good decision. You hold on to it. You're fine. It goes higher and higher and higher. You got a whole lot more money in the bank. Wonderful. If you hold on to it and it comes back down to $6 or $7 going into November or whatever, you commit to that. You say, all right, well, I had my opportunity and I made a choice. You know, whatever your plan is a good plan in some ways. I know that it's easy to be critical of yourself when you miss a buying or a selling opportunity, period. But that is mostly supposed to be about growing and learning, you know. If you can take into consideration like, hey, I'm doing the best that I can, but as I grow in skill, I will do better, and I can do better. The best you can do isn't always the best, you know, but it's the best you can do. So do the best you can do. Give yourself some space to do better as you learn more skills, and then don't worry about it. Do not stress if you sell and then it keeps running. Do not stress if you hold and then it drops. You know what I mean? Like, you're going to have to make those decisions, but learn from it. When this came up, I didn't sell any shares, all right? And I'm not saying that because I'm afraid of apes or something. I'm just telling you the truth. I know there's people that are like, buy and hold, you sell, you're a shill, man. You're a short. All right, whatever, dude. I don't really care as long as my family has food on the table, you know, what you call me. But when it came to 10, I didn't sell the shares because I was like, well, I'm willing to wait it out because this isn't ultimately where I think it's going to go. And I'm patient with the shares. Ultimately, I think this thing's going to go back up to like $70 to $100 long term. We're talking about February 2026 kind of stuff. All right. Maybe it's sooner than that, but that's kind of my goal. If by that point we are not where I think we're going to be, I will make a different decision. That's a long-term goal, right? Very long-term. Short-term, I have call options. We raced up. I'm looking at RSI. I'm looking at the setup. I don't think it looks good. I sold them at 10. Do I regret selling them at 10? No. Why would I regret selling them when they basically lost all their value within like a week or two? You know, I'm not going to ever sit here and apologize for getting out of a call option, which should be like a game of hot potato anyways. You should not be sitting in them forever and ever and ever, unless it's like a leap and you're just really waiting for volatility to kick back. You're going to have periods of deep red at times if you've got leaps. That's more of like a share accumulation game. You make the decision whether you want to continue to average down. That's the goal, right? For long-term stuff, 6 months plus. Those are different decisions. But like, I'm not holding any options past all these numbers here. Why would I do that? It doesn't make any sense. If I'm making good money, even if it were to continue to run, I would be like, okay, so I could have made $1 million. Well, I didn't, you know? I make decisions. Sometimes you're going to be in that situation where you sell at $10 back here and it just rockets and keeps going. And you're like, crap, I sold too soon. Wish I had held on a little longer. IWM was like that for me, but I don't regret it. I don't even really worry about it. I told you guys exactly what I did. I had longer term contracts back down here. I averaged down a little bit when we started going sideways here. I figured it would take a while. I had a price target in mind. I thought originally like 216 was kind of the low. Later I was like, you know, it could hit like 218, 220. So I actually got out of most of my contracts at 218. Where did it go? It went to like 220, almost 226. I probably could have made a lot more money if I had held them all. I didn't get out all at once. I got out in like stages on each of these legs, but most of it I exited at 218. Did I miss the top? Sure, I did. But then I look back and I'm like, did I miss the run? Did I miss making money? No. I didn't miss making. I still made profit. So I'm really only complaining about my timing, and it was literally like, I don't know, a day or two off. When I feel like the risk outweighs the reward, I just kind of am like done. I'm like, all right, well, it already hit where I wanted it to hit. So did I do better on AMC or IWM? I did about the same. And I think that's kind of the lesson there is like, you don't have to have the top in order to make good profit. Like you still make good money on those contracts if you get out at a high. I mean, if you got a 600% gain, you got a 600% gain. So what? I mean, you may miss some of that in the last couple days, but the other thing you can do is just follow the trend, you know, like if you can find the trend early on, and it's hard to do because this one actually kind of bent outwards a couple times, but if you can find the trend early on, you could have held all the way through until this trend stopped. If at this point I was going to make a different decision, what I would have done is said, all right, well, right now it's still holding the trend. I'm just going to wait and see if it's going to drop. I didn't do that. I just went ahead and exited when it hit 218 again on that Tuesday. But I could have just held it and waited till the trend dropped. That would have been smart, I guess. You know, simple strategy. But normally when I go into a trade, I have in mind where I'm going to go. I don't typically deviate very much from that. So like on AMC, you know, God willing, this thing runs and we see you're like, God is not in this place, Booksy. This is the devil's playground. God willing, this thing runs. If it goes up to above 11 or 12, I'm exiting. You know what I mean? Like, I'm not going to wait and try to hit the perfect top. I love having great targets. I love it. But I'm not looking to kill myself either with stress and worry and trying to catch. I mean, frankly, I'll probably unload some, like part of the way, just to make sure I have profit. So it gets to like $8 or $9. If it gets there, I'm going to be like, okay, well, I'll unload a few. And a lot of times what that is doing is it's covering my cost basis. If I can cover my cost basis early in a trade, my opinion is that's the best thing for me, because I believe that running with house money, as you might refer to it, is just profit. Then it doesn't matter when you sell, as long as you don't sell when it's red. Any green at that point is just profit. You've already gotten the money recouped. So if you get a huge enough hike in volatility and it hits $9, let's say I paid, I'm just going to use a round number. Let's just say I paid like $500 for some contracts. Now they're up to $1,500. Well, look, yes, if you hold all of those contracts, you're going to make a lot more money if it runs. But if you just want peace of mind, then you can sell $500 worth, and then you just hold the rest. It doesn't have to be like X amount of contract. It could just be a number value. Like, I'm just going to sell $500 worth. I don't care how many contracts that is. That's a third of my position. But now, guess what? 100% of my position is now just profit. 100%. All of it. So now if it runs again, I'm making, I may not make as much as if I held it all. And you guys are like, that's not risky enough, Booksy. You need to be more risky. I'm talking about a risk-off strategy. This is for people who do not like the stress of the extra move. You might be super confident about this. Maybe I am too. I'm still probably going to do what I can to cover my cost basis early, because then it's 100%, like for me, it's like 100% stress free. Now, shares, totally different story in some ways. If I think on a normal trade, right? If this is like a normal trade, this isn't AMC, you're not like $1 billion in debt or whatever on it. If this is a normal trade and I'm swing trading, I would probably consider selling and re-entering. Even though shares can be held for a lot longer, they're not going to be red here if it comes back to 750. But there may be an opportunity, and this is sort of, I don't want to say thinking like a hedge fund, but let's say, for example, that you bought shares on the way down, right? And let's say, for example, you actually bought quite a bit of shares in this $8 or $9 range when it first came up. And you've had these shares for a while. And all you're doing has been averaging down. At this point, your average is pretty darn low. It might seem a little odd to sell them for like very little profit. But if you were to sell, let's say you bought those shares at like $9.50. If you were to sell those shares at $14, you're still making a good profit, right? Not only that, but you might say again, well, why not sell the ones you bought super cheap? Because they're super cheap. The question is, do I think we're going to get back here again? And this is just simple mathematics, like averaging, okay? I'm not trying to be an elementary school lesson here or make you sound like you don't know what you're talking about, but if you never thought about this before, it's good to think about it, because some people, maybe they don't think about this kind of stuff. I want you guys to be aware that you can do this. Nobody is looking over your shoulder telling you what you have to do, okay? You get to decide. If I bought some for $9.50 and I've been averaging down, and most of my stuff is maybe real low, like let's say under 5, and I've bought most of my shares are around 5. I bought on all these dips. Maybe I got some around 6, but it's mostly down here. But I've still got these shares that are kind of high, and they're dragging my cost up, right? They average up. One easy thing to do is just get rid of the outliers and take profit on those. You're making money. So you got rid of the 950s for 15. No, it's not percentage-wise as much as you make down here. But the question is, am I going to get back there again? If I think we're going to come back to 3 again, then I have a chance to load up on 3. It's always a risk because you may not get back there. But if I think, all right, man, I'm pretty sure, this is me trading, I'm pretty sure this thing is going to come back to 7s and 6s. Wouldn't I much rather exchange those out, sell them here, and then buy in again if I want to, back at the 7s and 6s? So now instead of having a few hundred shares or whatever it is, I don't know how much you guys want to buy, but let's just say at 100. So instead of having a $900 value, you can get the same amount of shares for a $600 value if you just wait a month. Just sell them for $1,500, pocket the extra money, pocket the extra 900, and then use the remaining 16. I'm just throwing out really even numbers here or whatever, remaining 600 or whatever to buy in the same amount of shares. And now you have a lower cost average. It's no longer up here at like $7. Now it's down closer to 5. Now you have a lower average, and you took some profit off the table to feed your family or whatever, or pay rent in the meantime. There's nothing wrong with that. I'm pretty sure that most people do this. So if you're hearing me and you sounds like, well, this is, obvious booksy for everybody, I don't think it is, because I've seen people average down and then they think that they're just kind of like stuck constantly averaging down. They have to keep buying and buying and buying and buying. This is another way to adjust your average. You could have done something similar here as well. I'm not saying you should have, but I'm saying you could have. That's your choice. And I don't care what anybody says. I'm not going to sit here and judge you for selling anything. I don't care. It's not my money, it's your money. And ultimately, you selling a few hundred shares does not greatly affect the market. It just doesn't. Now, the mentality that the ape community has is that it does because you're adding to this greater amount. But I'm sorry. A lot of the people that were pumping that kind of stuff early on had already made millions, And they're people that made tons of money on that early run up. Some of them stuck it out. That's their conviction about it. I fully am for that. If that's what you want to do it. I really am. I am for it. But for some people, that's like just not what they were looking for. They just weren't looking for that. I don't think it's right to tell them what they should and should not do with their money. It's not right. It's not your choice. It's their choice. So for those folks that need to just kind of average down or whatever, don't look at this as like, should I sell all my shares or not? Look at it as, okay, let me go back and look at where I bought shares. Where did I buy shares that were a little high that I later had to average down? I'm not talking about the stuff that you bought from a year ago, 2 years ago, that was like way up there. I'm talking about like recently. Because going to 15, you're not going to regret it necessarily. You're lowering your cost average. Even if it continued to go up, it's very low risk trading in some ways. Because even if it continued to go up, well, I already took the profit. Now it's just these runners that are frankly more profitable anyways. These are like the 700% guys. This one was only like 50, 60%. So who cares? You're taking away that 50, 60% winner, and now you're left with all your 500 or 600% winners. Simple. It's just math. So there's like almost no risk there, and then if it comes back down, you've got the profit from that, and you can use that to re-enter, get the same amount of shares and more if you want, but what you could also just take some of that money off the table. And you now have the same share ownership with a lower cost average, and you've got an extra $1,000 in your hands. Simple. Not financial advice. Just mathematics. What about the capital gains tax when selling? What about it? You price it in. I've done freelance work since I came out of college. You know how much freelancers get taxed? They get taxed a lot. You want to know why? Because the government doesn't take taxes out regularly. So you pay heavy on taxes. You have to understand that every time you make a profit, it's going to be taxed after the fact. It's something that happens later on. When you make a profit on those big trades, you're going to get taxed on it. But if that's the only thing preventing you from swapping out your position, I would just encourage you to look at the numbers. The capital gains tax is higher than if you hold for more than a year. If you haven't been holding for a year and you sell, it's considered a short trade, they tax you more. Okay, how much is that tax? Because I'm willing to bet that even out of that profit, again, with the example that I gave you, like, okay, so I sold it for $1,500 and now it's down here. I want to say it's like 20% or something, or 40%. I don't know. It's like, depends on your tax bracket, but I think it's like 20% or something. So what? So put $200 aside for the government in your bank account and keep $800. Like, it's not, I'm sorry, like, to me, that's not a good reason. That isn't a good reason to not consider it. It's just another element of the equation. It's just another variable. Like, okay, is it worth it? I can't answer that for anybody. If someone looks at that and they say, well, it's not really worth it because if I hold for an extra 2 months, maybe I bought these in October, maybe if I hold another couple months, I could sell them. But in October, it's back down to $750. You have to make that decision. I can't predict the price future being perfectly, maybe it's not there, maybe it's higher. But that's your call to make, I can't decide that. You have to decide if it's worth it. I think institutions will gamify it for that kind of stuff. I think they're really good at that, for getting out and in when they want to avoid less tax, to have less taxes. I don't think they really care what you're doing, so you're not always gonna have the perfect trade. Yeah, I know. You get taxed on the amount profited. That's what I was saying. So I was just giving an example, like, no. How does a tax on profit cancel out anything? It doesn't cancel anything. So what? You're saying, does it cancel out the amount that you save on the trade? No, it doesn't, because you might save money. All right, so here's what he's saying. I think I understand now what you're saying. So you're saying, like, let's say I do this, and let's say this originally cost. I know what you're saying now. I'm sorry. Let's say I'm just throwing this number out there. Let's say this cost. I'm just getting 9 because I'm trying to make it easy. Let's just say 9 to 6. All right, and that's gonna be my guide here. And let's say that you're gonna buy the same number of shares. You're gonna buy 100 shares every time. So what you're doing here is basically you're selling. So this costs $900. It goes up to $15. Now you're selling for $1,500. Just simple math, all right? $1,500. And you're taxed on that profit. So you're not taxed out of $1,500. You're taxed out of $1,500 minus $900. You're taxed on the profit, I believe, right? So that's what someone else was saying. I agree. So that's the equivalent of $600 being taxed, correct? So you're taxed on that $600. Let's say you're taxed 25% or something, right? Which is $150. So you now have to deal with $600 less the $150 tax. So you really walked away with $450 because the $150 is going to go to Uncle Sam or whatever. So you got $450, right? Okay. Plus the original amount that you spent. So when you look back on it, you're like, well, in the end, then I'm being taxed 100 and so once you do the math here, you guys are like, it's not that complicated, Booksy. No, it's not. So you're subtracting 150. So this is $1,350, right? So you're saying, like, well, why would I then buy $600 worth? I'll tell you why. There's a lot of things. So now if I spend $600, how much do I have left over? 13 minus 6 is what, 7? So did I lose money in the exchange? That's the question being asked here. Well, I walked away with the same amount of shares that I had before, right? So I've still got 100 shares, and I have 100 shares, and I also have $700 extra dollars. So where is the loss there? You didn't have this $900. This $900 was tied up. There was $900 in securities, right? Plus 0 in cash for 100 shares. You have no cash here. You've put it all into that, the securities. This is the same amount of shares, right? So you have 600 tied up in securities plus 700 in cash for the same amount of shares. So you have less money invested in the same amount of shares plus an extra $700 in cash. No, I disagree. Because $700 in cash is the profit. So if you're looking at this example that I'm showing you, there's no way that's going to outweigh. The gains tax is not that significantly different. There's no way that's going to outweigh the benefit of... There's so many benefits to this, like it's not even funny. In this particular example, I mean, if you have like millions, you're going to have to decide for yourself. I don't know. If you have millions in this company, you probably are doing pretty well. But if you had that much invested, maybe it would be significant. But I'm sorry, for $150 on this trade to have a lower cost average, you've lowered your cost average by like $3, which means the next time it runs, you're going to make, I don't know, how much more percent per share. I couldn't even do that math. You're literally investing in your future when you do this trade, and you've got $700 in extra cash. So if you really want to make an argument about value, you could put all of that back in on a sell down and have twice as many shares, 3 times as many shares or whatever, almost 3 times as many shares, 2 times at least, as many shares for less value, which means when it runs again, these shares are not worth as much as these shares. Plus opportunity cost. Now you've got $700 that you can do whatever you want with, which could be paying a payment on a vehicle that you need to pay. That's not being tied up here and then basically running red once it drops back down. Then it's just sitting there. You're saying the difference between like a 20% versus like a 10% tax for most people. I mean, it's not, I could go look at it. I think it's like 25 or 35 versus something like 10 or 15. I mean, it's like half or something. But most people aren't in like $1 billion tax bracket. They're not getting taxed 50%. Yeah, I think it's like 35 and 15, but it's purely simple. Yeah, I mean, if you have a state, there's another one too. So it's just about whether or not you think this particular transaction is worth it. I can't do that math for you. But if you ask me, would I rather have, just ask me this question, like straight up. Pretend like you don't know what's happening in the middle. If you ask me, would you rather have $900 in securities for 100 shares at $9 a piece with no cash, or the same amount of shares at a lower price with only 600 tied up with $700 in cash? I don't know why anyone would look at that and say, I'd prefer to have this just so I could wait a little longer so I don't have to pay as much in tax. Like, there might be a tipping point for that equation where at some point, like, it's worth it, but I'm not seeing it with this example. Like, this example it's just not worth it. It's no brainer to me. I'm like, okay. I would rather have the 100 shares at $6 a piece than 100 shares at $9 a piece, especially if you handed me $700 in cash with it too. Then I could do whatever I want with. I could buy more shares, or I could just put it in something else and use it for something else. And I'm lowering the cost basis, which means this has exponential growth potential. If you don't think you're going to be in it for more than another year, maybe it matters because you're like, well, now I got to tax on this again. I got to get taxed twice on this profit or something. Well, maybe, so. That's true. That's true. And a lot of times they don't tax it like you think they will if you've had losses that you've taken over the previous year. That's very true. You can actually move your losses over. So if you've got substantial losses, this is not even going to be a blip on the radar. It won't affect anything. I forgot about that. That's true too. So anywho, look, I cannot give you financial advice. What I'm showing you is that there is a math equation here that's pretty simple. And I'm trying to tell people, because there's somebody that was saying like, hey, I don't know what to do. I can't tell you what to do. But I can tell you that there's definitely more than one way to trade every situation. And it doesn't have to be all or nothing. It does not have to be all or nothing. It does not have to be a certain kind of trading methodology. You can do a lot of creative things with your account. And if you need the extra cash for some reason and you're tight, all I'm saying is just look at your cost bases, make a decision. You're going to have to do the math, decide if the capital gains tax is worth it to you. I think in the example that I gave, it would definitely be worth it. But I understand why some people might not feel that way given how much they hold. Most of the people that are in those longer term positions anyways are probably deep red anyways right now. Anybody that bought in 2023 and held it, or early 2023 rather, and held it, how long ago was that? Yeah, early 2023 and held it. Before then, they're all going to be red. I mean, so, no one's fooling anybody here. If you've been holding shares for more than a year right now, they ain't green, like they're not green. So unless you wait until maybe I bought on September 11th, I'm going to sell on September 11th. They're not going to be green, like, so I'm not really sure I understand that anyways, because the example I gave was definitely a short term because of where we are. It might be different with like GME, and I wouldn't treat it the same way. GME is in a very different spot anyways. But there's similarities, just mathematically speaking, they're different. I'm not saying make a crap. I'm just saying, like, if you're stuck with some higher stuff and you just wanted to sort of see if there's a way to alleviate some of that, there's definitely ways of doing it. It may not be in your best interest depending on how long you've been holding those shares. I agree with that sentiment. So folks that are saying that, there are definitely situations where maybe that doesn't make sense. So I get it, but I also think that people stress way too much about that higher tax. Because if your profits are good enough, or if you've had substantial losses, it may not matter. And you're still going to walk away with the extra income in a better cost basis. It also depends on, and this just in theory, right? We're just talking about hypotheticals here, nothing real. But it also just depends on maybe what you think is going to happen. Because if I'm somebody that doesn't think that we're going to come back down to 6, I wouldn't make that decision. And if I'm somebody that thinks that Booksy's an idiot and he doesn't know what he's talking about, then I'm not going to like just sit here and like listen to somebody who's got a microphone who's talking to me about it on here. You know what I mean? Like, that doesn't make sense. You need to do your own due diligence and also decide what you think is going to happen. It's easier when you hold all the chips in your hands. So like institutional traders can make those kinds of decisions a lot more steadily because they're in control. So if like they can buy and sell knowing that like, hey, we're going to come back here later. We've got enough capital to push this stock where we want to push it. And we're, especially somebody like a Vanguard who's like the big emu, in the race. They're not worried. There's no one else that's going to come along. BlackRock's not going to come along and just suddenly screw them over. That would put them at war with them. You know what I mean? Like, it's not going to happen. So they're not at all concerned about some smaller institution mouthing off about going short. If they want to go long, they're going to go long. They don't care if they run over some other institutions in the process. They're going to shake the crap out of them until they decide to run them and then burn them on the short squeeze. That's what they do. They're against everybody except for themselves. So if they have the power to control the market and they have enough money to do that, and they do, then they can manipulate the stock in the way that they need to in order to benefit themselves based on exchanging out for profit and whatnot. So I would not look at it as, hey, I know exactly what's going to happen. So, no, because like I don't. If I'm an institution, I might know like, hey, we're going to do this. I'm doing the best I can to, from a technical standpoint, anticipate that. But it's just me. I'm just a singular person with a chart over here. I could be wrong. So you have to decide what the risk-reward ratio is for you for that kind of stuff. Personally, do I think it's risky to offload some higher shares up here at 15? No. If you've got stuff from like, if I have stuff, I don't know, I'll have to look. If I have stuff that's in the 9s and 7s and 8s and stuff, I haven't made any of this decision yet. I might consider it because I could probably buy in at a better price anyways. And that's going to drive all the other averages down. And then I don't have to wait as long to get out later. That's another thing. It's like opportunity cost is also about time, and by lowering your cost average, you're reducing the amount of time that you have to spend trading this. Because if I can manage to go from 9 to 6, no, it's not a huge amount, but maybe it saves me from having to, maybe it gets me down to like 40s or something on my cost basis. Just an example. This is not me. I don't even know what mine is right this second. I'd have to go look. But let's say it gets me to like the 40s. Well, then if it comes and never fills this gap at the 40s, I'm in profit. I'm free to do what I want to do there. As opposed to maybe being at like 60 or 70 where, hey, I've got to spend a lot more money to get my cost basis down, and now I'm waiting extra time because maybe it hits 40 and it doesn't hit 70 or 100 or whatever till for another year, and that's very possible. So, I mean, these things are long term. So, I mean, you've got a lot of reasons to consider it. It's not just the monetary cash value. It's not just the cost basis value. I mean, it's all kinds of stuff. And you never know. I mean, you could have a kid who plays hockey or fell off a bench or something and busts his teeth out, and now he needs thousands of dollars in jaw surgery or something. I mean, I don't think I'm going to care that much about a tax if it means my kid gets his, gets the bills paid and he gets the surgery he needs. Like, it's not going to be a big question in my mind. So everybody's going to be in those different situations. That was just a fun little excursion. It was just kind of demonstrating something and purely hypothetical. Purely. There's nobody individually I was talking about, not even myself. So this right here looks so good to me. I'm so happy right now that we came back. It's kind of beyond the point of hitting this 20380s. I think it might be a little higher up if it does fill the gap. It may not go that far, so we'll see. Still pretty excited to see if this can hit here and then return back to 212.48. I do not believe the gap has filled. It did, however, hit a support at 204.85. This is on IWM. So it may take a minute. I'm not sure. I don't think ETF gaps are as important as some other things, but historically, this is legit historically, like they're not always filled. It just depends. So there's dozens and dozens of them on ETFs that just never get filled. It depends on the opportunity, I guess, whether or not they fill them. These ones did, so there's that. I had speculated they might not, but they definitely did. So this could be an LSPY, where you're chopping up and you could get a drop. But I think if we can manage to get this push above 212 up to 212, we're going to see a really positive week or two here. I hope. I think that's the general idea. I think that this is going to come back down again. Not really. Like it's already kind of getting to the place where I thought it might get to. So I'm pretty happy with this so far. I don't see any kind of mega double flush, but I do see a very, very nice touch right where I thought it was going to be, which is nice. Pretty much in that same little pocket. We're a little low, so maybe we still need to see that up thrust. I'm not convinced yet that we've gotten that sideways action. This is really small. It's hard to tell. Maybe, because it did have a push here on RSI that then dropped. That's sort of what happens. I don't know. It's hard to say. I'm not going to stress it. I'm just going to focus on the low at this point. So if that's all it does and it just went like that and then it drops, that's fine. If it still goes sideways and then pops again and then drops, that's fine. So again, let me repeat that. If this is the pop and then it goes all the way down, and there's a lot of selling right there, it could be, and then it goes down as far as it can, hits 485 or 483 and then goes, I'm probably going to just assume that was it. I wouldn't have another choice there. But if we chop sideways for a bit and then pop up maybe towards the end of the day and then drop, I'm going to be like, okay, there it was, The timing on these kinds of things is very... let's just say speculative, because we tried to use, I think, the trend last time. It didn't really work. I mean, I guess that was a whip around the trend. So maybe, I don't know, maybe you could try that here. And it looks right. And then the debate is, well, is that the trend or is this the trend? I don't know. It's one of those two. So there's that. We're just not there yet. That's all. I expect it to be 480s or 482 or 43. That's just where I'm going to hang my hat today. And we'll see what happens. If it doesn't go that low, fine. If it goes lower, we'll deal with it. We'll definitely check it out as the day progresses. Yeah, it's kind of weird. You know, I said 2109 was the first kind of major stopping point. I still think that's true. The reason for that was this horizontal right here at 2109. I wanted this to be support. So if you're asking, like, did we achieve this? This was kind of the first big check. Yes and no. So what's happened here is that we've come up and we've pressed against this creek. Now, you might be wondering, well, what is that? Is that super important? Yes, because it's the first of the downward creeks. So when you go back and you look at this, these tops are kind of strange because there's a lot of wider creeks here that point outward. But downward, there's not that many. This is the outermost point, and it's on July 31st. So going from the peak up here on the 17th through the 31st, you're really bonking against that trend right now. So that's the first of the major downward creeks. And all the ones on this S-curve are going to be kind of facing a little more outward. So like that's these guys that are rounding out because they're going to point out farther, if that makes sense. They just will. I can demonstrate it if you want, but they just be like this. They'll be over here. We'll interact with them, but we'll interact with them as we interact with the major downward creeks. So if you're just going to keep it simple, don't worry about that. Like they will interact with those. We will interact with them because they're there, but they're not as important as these major downward creeks. So this one, the second one, comes from the next two tops. So you can see how this works. So this is like an iterative way of drawing it out. So these two peaks, that's the next one. And then the previous two peaks here for the highest one. So what it creates is kind of a downward facing fan. Like it's higher, then it's a little lower, then it's a little lower, right? Because it's curving down. But those are them. So we're actually interacting with the first one right now on GME. It's a pretty big deal. I mean, it is important, you know. So not to overstress it, but it's a significant level. So when we hit 2109, I was kind of like, all right, when I thought what would happen is we'd come up and then maybe regain support here at 2065 and then try to jump. So we might be doing that where we kind of build up, come back down here and find support and then go. But any kind of advancement here would be good. So secondary to that, and it is secondary, is a cross. So we talk about these a little bit here and there. What these are the waveform crosses. So this is like when your wave is jumping here, what's going on. The blue line indicates where I think those majority waveform crosses are. We've already jumped the first lower one. That one's kind of done. Probably jumped the steepest one with this, and I'm not going to, you know, try too hard to like manufacture that, but I think it's probable that it goes right to this peak, and it looks like it does. So that was the other one. So I picked the wrong ones. It's that simple. I could have picked the highest one and it would have been right. That's this guy right here. So you can see that. My bad. You guys are like, you suck, Booksy. Sorry, man. You're not good, man. I don't know, man. That's all I got. So this did hit the lower one. I thought it was going to hit the middle one. So we're at the highest one right now. This is the last one that I've got. I don't have another one because there's no other one to go to. You could go like to here, but that's like way over there. So it's like basically flat. So this is the final blue cross. So if you're looking at this as kind of a rotation where the wave came down, built out, and then came down again, these are the places you need to find support, and that would indicate that you're going to advance. If you were to break those or hook here, that's where you'd kind of indicate that you're not changing direction. You know what I mean? Because if you think about that cross, that's really significant to find support here after jumping over a creek to find support on it. And then that's the area I'd say, yeah, you're done for. So on one hand, very positive so far. We've crossed two of them. On the other hand, we haven't crossed them all. And unfortunately, as you can tell, we're pushing against the most narrow, right, of the downward creeks. I mean, frankly, this is just a cluster cuss right here of creek levels. Because then in addition to that, I don't even know why I didn't see that. Then in addition to that, you've got the purple ones, and you guys are like, what are the purple ones? Purple ones are from back here. I specifically chose multiple points for these 3 purple ones because I didn't know which one was the best. I know that sounds really amateur-like, but I just couldn't decide, so I picked all 3. All 3 were respected, by the way, when we came down. So I don't know. I still don't know. But oddly, we're on like that middle point as well. So 2109 is a rough level. You know, there's a lot going on right here, and man, yeah, there's a lot. So it's a bit dicey for sure. There's just a lot here. That's like, that's not helpful, Booksy. Well, I think what may make you feel better is that if we were to break to the upside here, even after a little bit of tribulation or something, this should be a really powerful move because you're back above the creek here, and then you're also, you see, you've walked out, and you're also back above this, and you're also above this. So, I mean, it's like it's a three-way intersection. I mean, it's pretty amazing that we're here right now. But this is like a critical spot, you know, for GME. So if we can manage to hold that three-way intersection in advance, you're breaking 3 creeks at once. It's a big deal. For the way that I look at the charts, that would be probably as crazy as it gets. You know, 3 creeks plus a horizontal, that's a big deal. You know, I guess the only major question I have right now is this a support level that we need to check first at 2068? And I don't know. It might be. It might be. I haven't even looked at MPW today. I haven't even sneezed in this direction. Huge amounts of volume in this sell down. It's not really going anywhere. It's kind of just chilling out. And I mentioned this before, but this is a widening for sure. This is like a 1, 2, 3, 4, 5, 6, 7, 8 widening. And then on the 9th, it broke out. So it should, in theory, break out and go, once it finds the support here, go right back up to the top at 507. So unfortunately, we kind of spiked and did not find support over 482. You can see the distribution happened right there. It just didn't happen. I mean, we needed to be support. It wasn't support. So just a double up thrust right here through doesn't count. So unfortunately, what did happen looks like we sold off from that level again, which is a bummer. And we hit that orange line. That orange line may not seem super significant, but I think it is. I think it's pretty important. I believe it signifies like this trend continuation right here. So we're in a weird spot. We really want to be above that. And so I don't want it to be, we need to find support on it. And that's where originally, I say originally, but it means earlier, before all this happened. Back in late July, I was talking about that being a probable place of support. I didn't really want it to drop there. We ended up going to a 618 retracement. So I do want to get above that orange ascending line. I do think that's very significant for the development of a move here. I would not be overly surprised if we have another iteration. I know it's kind of annoying to talk about that kind of stuff, but at this point, it sort of makes sense to me that that might be the case. So if it does get stuck for some reason into like next week or whatever, let's say the market goes sideways for a little bit into next week, it may make more sense to go ahead and do it again. I think it's a little weird. And strangely, like both of these have gaps on the top. This is a gap here. This is a gap here. I think it's doing the same thing as like AMC, where it's like pumping, 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 and it's going kind of sideways and up and trying to like accelerate. But if that's true, then you should see it come back to 50. I still think it would come back up all the way to 507. I don't think this is the place to stop. But it may very well be that after you hit like 507, you could iterate again. You're like, gosh darn it, man. Screw these iterations. Well, I'm just calling it the way I see it. Like, I think this is likely. As I think if you push up again to like 507 or something, it might make sense to come back down and retest one more time this support. And that's at 464. That's right where, actually it might be higher. It should be 467. It's pretty close, 465. So it's right where that, so if I'm a little off and let's say it goes to maybe 5 or 512, let's see, 5, could come up to here, I guess. Could go to 509. Anyways, point is, I think that if it came to like 512, for example, I would be like, okay, that seems pretty likely because the current motion is to continually do these 618 retraces on these push-ups. So let's say this advanced really fast. Maybe it backs up to here and runs up and goes all the way to 512. It may very well be that, and you can see why that might make sense. It may very well be that you get here and then retrace again. And this time you check the top here, and then that's like kind of where you're ending your iterative moves. I've got this drawn out pretty long-winded. You know, I don't know for what it's worth. I don't know that this happens. And it might be that this is the end of the iterations. It's going to go ahead and check 467 now, and we don't have to come back. Again, this idea that like they change is really important. You don't want them to keep doing the same thing forever and ever because then it would never go anywhere. You want to see it have an alteration. So a good alteration here would be hitting 467 early, advancing to 512, and then not dropping all the way to the 618, but rather going back to 483 mark. And I'm talking about MPW here, if you're kind of lost. Go back to the 483 mark. I think somebody had estimated like August 12th or 13th might be their earnings. So yeah, maybe going back there, and then that's where you actually leave. That would be a really good alteration. So instead of making a full 618 retracement, maybe only make a 382 or a 0.5. So well, I think what you want to see is that support here. It's like wing support, you know. You want to see it build out here and then iterate again higher. So I'm going to leave for my lunch break. I'm going to come back on time today. My kiddo's now in school, so it's lonely housewife booksy time. So you guys like, what? Just joking. I'm joking, guys. I do have other things that I do, and I have to work on some other things this week. So I take the time during lunch to do that, probably catch up on men's volleyball. I will be back maybe an hour to an hour and a half before close. I'm not going to keep the stream on the whole time today because I need to use my computer for my animation stuff. So I'm going to take a break. But that was my recap. I did a recap of the last 15 minutes. So if you missed it, go back through everything you can. So far, so good. I really don't feel like there's a whole lot here that's not been built into it. So I'm expressing to some degree, my relief, but also just optimism. So I'm hoping that when I come back later, we'll have already made this move here down, and we'll see it kind of working out. And that we won't have to wait till tomorrow. I like the volume kind of dropping here to nothing. I like the RSI where it's at. I feel like we're lacking that big dump though. You know, this one, boom, boom. It's just not there. I don't think this is it here. And there's a big drop, but it's not like a high volume, continuous high volume drop. So I don't know. Maybe this is it, and it's just like, that's the last push and drop. I don't know. And it just takes off. As soon as I leave, it's like back up to the top. And you guys are like, well, great. That's fine, you know. I think what's going on is that sideways action before the pop and drop. That's what it looks like to me. If you had me guess about it and you're like, hey, man, take a guess, I would say, don't think that's the sell down here. I think this is the bounce before the bounce. So I think this is kind of a sideways action before the big move. And then after this, because there's a little tiny gap right here on the 10 minute, I think after this you pump up to like almost 5 and then it dumps hard down to 482. I think this is going to all happen today. Gosh, that would be amazing. I would be so happy if this happened, because it kind of looks like if that times out well, this could be all today. Like, we may very well see this change character. I guess the worst case scenario is just failing here. It's got to come back above 504. So it's like the other ones. Think about these little markers. See these little guys? 544, 521. Now it's... yeah. Now it's... yeah, it's like 503. So this is going to be a big deal level for us. Oh man, we're going to... I bet we iterate again. That would suck. Don't say that, Booksy. Don't jinx us. I just feel like it's going to do it. I don't know why. I think it's always so negative, but try not to be. I feel like if it iterates again, it's going to be just super impossible to follow it. So we may end the day like right at 5. If it does that. I really don't want that. I want it to just rip through it. All right, so when I come back, we'll take a look at this. I'll be back in a little bit. You guys have a good lunch. We'll talk to you later.